And I'm starting the timer. All right, we're chilling. Let me post this link in the Discord. Yeah, man, I've been trying to visit a few places, and I've been hearing Mexico's not too bad, so I definitely might check it out. I have a lot of buddies telling me that.
Yeah, Mexico's wide open. It's a great place to be right now.
Yeah, a lot of people are in Tulum right now.
Yeah, I was in Tulum for a month. Tulum's dope, but it's, I don't know. I like Playa better. It's just, there's a lot of, like, everybody, it's so popular right now. There's a ton of construction. There's a ton of infrastructure going up. It's kind of overpriced. It's, I don't know. I mean, it's definitely good for short-term vacay. But, you know, coming from my point of view, being a digital nomad, it's not a long-term stay for me.
Okay. How long have you been on the road for, man?
Basically, just, you know, it's not, I haven't been doing it for that long, but all year so far. And just been, I've been prepping for it for like 3 years, and then COVID's just like, all right, here's a bunch of free money and no job, go for it.
what's your account situation look like as far as, like, you know, I mean, like, you know, you could write a lot of stuff off and all that, or because, like, it's all, you know, business, work expense and all that, or?
Yeah, so I'm actually I'm Canadian, so my tax burden is a little bit different from the typical American, and yeah, a lot of the shit is, we pay a lot less in income tax than specifically trading. You know, everything's a taxable event when you're a trader in the US, whereas Canada's, you're allowed to trade like pairs. So because Tether is technically a cryptocurrency, you don't have to ever pay taxes on a Tether trade.
Nice.
So there are, but I mean,
a Canadian citizen, damn it.
Nah, man, there's better options than that. You just fucking, where's a good spot? You get a Malaysian passport, live in Singapore, and you don't have to pay any income tax. If you're gonna go through trying to get,
is it easy to get a Singapore, a Malaysian passport?
Yeah, if you have enough money, it's easy. You just buy it. I think Singapore's got like a $200,000 investment visa, so that's like not much. That's pretty achievable. You just invest in a local business, or, you know, put X amount of dollars in a Malaysian bank, and you qualify for tax residency. The only caveat to that is you do have to expatriate from the US, because both US and Canada, the tax system follows you globally, which is really shit. So depending on how crypto goes, you know, I'll probably entertain the idea of expatriating from Canada. It depends. I don't know.
Yeah, there's other good places out there. I mean,
yeah,
nothing like, you know, back home, but I mean, you can make do with whatever.
Yeah.
Yeah, dude, I have to definitely hit you up after the stream one day, man. Just talk about that, because that's what I'm interested in doing.
There's a whole world out there.
Oh, I know, dude.
All right, so we just hit the timer. We got 41 people watching so far. Guys, you know what? I'm gonna run the timer for another minute. All right. You guys get like pen, paper, whatever you guys need to learn, like snacks, whatever you guys want, and I'm gonna run it for another minute just to get everyone in here, because I know that there's still people trying to pile in. So we'll just run the timer for one more minute, and after that, we'll start it 100%. All right, pop that out. Yeah, man, there's just so many opportunities that crypto offers that not many people, you know, take advantage of. You know, I'm surprised when you talk about crypto, or, you know, anything crypto related, people do not know what it is. Like, no, especially older folks. Yeah, exactly.
Not even older folks, man. People younger than me. My little brother doesn't fucking get it. Like, I don't know.
It's like, what?
It's
like,
just, it's because it requires energy. It requires energy for you to sit down and learn it, and people don't like to do that. There's no incentive. Like, they're just like, I don't know, whatever.
It's like, why,
I don't care.
Why work anymore than I'm already working now? I just want the money.
What is it? Oh, it's a decentralized peer-to-peer network of cash and blah, blah, blah. And it's just like, well, fuck, I don't give a fuck.
Their brain just shuts down. They're like, yeah, that's whatever, man. I mean, I don't see it making me money right now. It's like, that's just a terrible mindset.
How'd you guys get into crypto?
Yeah, me. Yeah, so Brad and James, like, they were traditional investors, so they're mainly traditional, and they focus on, like, you know, stocks and stuff like that. And I met Brad, and Brad knew James, and I was like a big Bitcoiner, and I was pretty much blindly into Bitcoin. Like I was brand new, like a super maximalist, like Bitcoin to the freaking moon. But I kind of just started learning a lot more, and me and Brad started exchanging some ideas, and as time continued, Brad was into Bitcoin, but I got him more into it, more active into it, and he just loves the price action of it. Me, I kind of just I saw like I got in like when everything was at like 15K, 13K. And people were just talking about it, like the hype train was going up, and I looked into it. I'm like, man, there's no way this thing's not going to be, something big. But that's when I started getting into the Wyckoff method when you were teaching it, and I started looking into that, and I was like, okay, well, I want to see how the correlation as time progresses to an asset crashing down or pumping up, relates to where we're at now in the present, and that kind of got me into like more strategies, more trading, and just that's kind of like where I was at, how I got here and everything. Yeah, it was cool, man. I mean, cool times to be alive.
Yeah, it's very interesting.
But
we're gonna see some pretty crazy innovations in the next 5 years.
Yeah,
the world's gonna be fucking turned upside down, man.
Yep, exactly, dude. Exactly. So you know what?
Must be reading that Armstrong Economics, huh?
No, not familiar with that one.
Oh, you should look that up. That's a fun read.
Armstrong Economics. I'll check it out.
Martin Armstrong. He's got some interesting material out there as far as like how the future is going to turn out. And he's actually predicted like a pretty decent amount of stuff. And he has like some things out there that kind of, I mean, they're just interesting. I don't want to ruin it for you, but there's just a lot of stuff that happens like economically and globally that plays out.
It's honestly like when you zoom out and just look at it, like it's a no fucking brainer. Guys, we're printing money.
Yeah.
It's worth nothing.
Exactly.
It's worth $0. It's worth absolutely fucking nothing.
Exactly.
Don't tell
it's just I know, but like it's just when you zoom out, like this will be like 100 years from now, we'll be in the history books and people will be like, so how did they even function with money that was based on nothing?
Yeah, exactly.
All money is
that's so interesting.
Back them,
Yeah, it's so interesting that people believed that.
Yeah, right. People are wild. All right, so guys, welcome to the stream. Right here we have one of the YouTubers that is actually one of the smartest out there, and actually kind of underplayed, as a YouTuber. This guy's smart, right? I used to, when I was becoming up Bitcoiner, I wanted to know how everything worked, and I watched a lot of his videos. He was active with the market. He pretty much explained the Wyckoff method, which is one of the methods that people use to trade Bitcoin or to like gauge its strength or weakness. And so I figured, a lot of guys were asking about the distribution schematic and how it played out. And I want you guys to get more informative information on what you're seeing. And, if you guys are talking about it, then I'm going to find somebody who's very good at it and just bring them on the stream. And then that way you guys can get a lot of value. And if you guys want to follow up with the rest of it, he specializes just in the Wyckoff, and you guys are more than welcome to go to his Discord, which I'm going to post in the chat, and just go in there and get as much value as you can, guys. Because at the end of the day, this is really a community. So without further ado, guys, this is Baloo. He specializes in the Wyckoff, and it's all you, brother.
Thanks for the intro. So we're going to do a quick and dirty crash course on the Wyckoff method, just kind of talk about the theory, the method, and what it all means and how it all works. We can really get lost in a lot of the TA a lot of the times, thinking, we've got a squeeze here, triangles getting ready to break, this moving average is crossing that moving average. And, when you zoom out and think of it, it doesn't really make a whole lot of sense. Can I do a screen share here?
Yes, I think Brad has to enable screen share.
I think I've got it here.
It should be good.
Okay.
Yeah. So Richard D. Wyckoff, he's an old stock operator from the original stock market boom down in the 1920s, early 1920s. And he developed this method that basically just follows the institutional money, the smart money, the composite man, the individual who's actually has the ability to move the markets. So this is a famous quote from him. All the fluctuations in the market and in all the various stocks should be studied as if they were the result of one man's operations. Let's call him the composite man, who in theory sits behind the scenes and manipulates the stocks to your disadvantage if you do not understand the game as he plays it, and to your great profit if you do understand it. So this is a common thing inside of the crypto markets, and it's very applicable. It was very applicable in the 1920s in the early stock market boom. It was a small market. It was a relatively illiquid market. It was a new market. We are now in a small market. We're in an illiquid market, and we're in a new market. And both of these markets were arguably more of a free market than what we see in the equities side. So the downside of a free market is it does come with vulnerabilities and the ability to manipulate. So a lot of people push a lot of criticism towards cryptocurrencies because of their ability to be manipulated. But if you understand the game, you can you can position yourself alongside the manipulation as opposed to trying to fight against the manipulation. So this is just the very basic, like, dummies version of what we're looking for here. And it's just the price cycle. You have an accumulation area. This is where the institutional interests are accumulating the asset. You have a markup event, you have a distribution area, and a markdown. And that continues time and time again, ebbing and flowing into oversold and overbought over time, creating a linear structure to the upside. We can break this down a little bit more by identifying the trading ranges themselves. So when we're in an accumulation schematic, we're in a non-trending environment. We're range bound. The ranges can actually be quite favorable trading environments for those who are kind of skilled, especially in the crypto markets, because these ranges can be 40 to 50% ranges. So there's plenty of room to trade inside of these environments. But the main money makers here is as a result of the creation of the trend. So the markup phase is where you want to position yourself. You want to get in at the beginning of the creation of a trend. So the markup phase is the meat of the move, the accumulation and the distribution. You're not buying the bottom, you're not selling the top. Give it up, don't try. Make your money in the middle is basically the most effective way for you to kind of position yourself alongside of this market. So that kind of brings us to this area right here, which is the distribution. Accumulation is the bottom, distribution is the top. And we've all seen this schematic floating around Twitter. It's made some YouTubers really famous overnight talking about this distribution schematic. And they're overlaying this as though it is a pattern. And I will agree that what happened with Bitcoin is it was very much so following the structure of this, but it's more so just about a sequence of events where you're analyzing the rallies and the reactions to determine what is going on behind the scenes. You know, when the big players exit the system, what they do is they flood the market full of supply. They flood the market full of supply when the market is at peak euphoria, peak hype, and the order books will sustain the price action for a long time before the market can no longer absorb the flood of supply, and the retail demand can't keep up, and we enter into a markdown phase. And it's actually quite a repeatable pattern that we can see inside of Bitcoin. It took me a while to flip my bias because I do hold a lot of value on trend analysis. So for as long as we are making higher highs and making higher lows, I'm not worried. And so until we got here, which is now confirmed the phase C, and we got our first sign of weakness, our first lower low, I was bullish, even though the preliminary supply, meaning the whales dumping into the market, happened back here at around $40,000. It was just the over exuberance and the over bullishness of the market and the excitement of the market that carried us through this entire consolidation. And it's just the demand is weakening, so the rallies are weakening and the reactions are strengthening. So that's kind of where we are today, but there is a silver lining, or at least there is a potential. I want to, everybody's talking doom and gloom right now, and that's fine. Anybody who's bearish is typically going to be in a position of protecting their capital, which is always a good thing. But there is also a silver lining, and that's potentially this, which is the reaccumulation after decline. So a reaccumulation after decline, it is kind of a weak pattern inside of the Wyckoff method, but it starts off with a distribution event. And we do see these periodically throughout a bull cycle. We will maintain a bullish trend with these types of schematics playing out, which is basically just a shortened version combination of a distribution and an accumulation right underneath. So if we were to kind of look at something along those lines, we would basically be looking at something like this. So I'll just stretch this out a little bit, possibly even, stretch that lower range out a bit, open it up. And potentially we're looking at, some sort of, getting a little buggy here.
No, you're good.
Some sort of consolidation where, we'll get some sort of event that confirms a continuation of the trend. This is the bullish case scenario. I can't give you the guarantee. I can't give you a bias or an assumption that this will play out for two reasons. Number one, we're still in phase A. Phase A sets the range. It's a no trade scenario. It's just a wait and see, hope and worry type situation. And then we're going to be getting into phase B that's going to give us some hints towards whether it's an accumulation or a distribution. But again, it's not a area where you can really be positioning yourself for a long trade, trying to catch a markup event. But what we're basically waiting for is just a confirmation and a turnaround. And I do think it is possible. But given the current environment, lower highs and lower lows, our bias is unfortunately bearish. So when we're trying to interpret the chart, yes, there is bullish possibilities, but we need to kind of keep a level head and understand that, there's always possibilities, upside, downside, sideways, and you want to just approach it with a neutral mindset. Don't try and, get into higher risk trades, trying to catch up on some of the losses or anything like that. Just keep a level head and realize that this is a game. There is manipulation, but the effects of the manipulation are very much so attached to where you became a participant in this market. So unfortunately, if you became a participant in this area of the distribution, you're being manipulated. You're going to kind of be at the mercy of the market because you were buying when the composite operator, the composite man, has basically been scaling out of the position and flooding the market full of supply. You want to get in on the accumulation. So from the macro perspective, the accumulation is long gone. It was between $3,000 and $14,000 for, I think, 2.5 years or something like that. But if you are to have a chance to be positioned appropriately inside of this market, this would be the accumulation that you would at least get, be in the best position if we were to get a continuation of the bullish trend. Not financial advice. We always kind of have to say that it is risky. There is a lot of factors that could play into us getting to some lower levels. But I do think that, if ever there was a possibility, it would be in this area. If we break down from here, I think it's bull trend or bear trend, and it'll take a long time to kind of repair. So that's kind of just the basics. There's a lot to this method. It's one of the more complicated methods to kind of learn and understand. And I feel like it's a culmination of a lot of other trading styles coming together. They can help you with this method, but to me, it makes the most sense because it focuses so much on supply and demand. Everything else is just like, we broke a trend line, so this has to happen. To me, that doesn't really make a lot of sense. But when I can interpret strength and I can interpret weakness, it will help me position myself appropriately. So that's your crash course on the Wyckoff method.
Nice. Okay.
That's a great thing. I just want to point out, Baloo saying the word supply and demand. That's the two biggest things you need in the market is supply and demand. And you never hear those words often enough, especially not in crypto. Baloo, do you have an example at all, dude, of
I actually
in the past at all?
Yeah, I've got a really good example actually. If we pull up the BLX, for those who are new, the BLX is the Brave New Coin Liquid Index. It is it's kind of limited because its lowest time frame is the daily, It prints one candle per day at the end of every day, and it gives the average trading volume and trading price of every exchange. It indexes and averages out all of the Bitcoin trading on a daily basis. So it's going to give you the most accurate interpretation of the volume. And I'm actually going to switch this over to the 3-day chart, and we're just looking at this logarithmic channel here. As far as when the bull market began, which was at the COVID shakeout. The COVID shakeout was the spring event that really sparked off this this bull market. And we can take a look at the volume signatures to really kind of interpret the supply and interpret the demand. So it's a really zoomed out approach. You know, we had this high volume event right here. These high volume events are typically at the point of a trend change. So within the market so far, we have 3 of them, and we'll interpret them one step at a time. But and then there's some smaller ones as well. So we'll make notice of those as well. But yeah, we got a huge volume signature. This volume signature is showing a ton of capitulation. These people that were hodling Bitcoin for 2 years, dollar cost averaging for 2 years, buying the top of the $20,000 Bitcoin and then DCAing right down to the bottom, only to find themselves fully capitulating into the COVID event, thinking that the world was going to end. All of that Bitcoin changed hands, went into the smart investors, went into the institutional players' hands, and it was locked up. When you have the smart buyers buying these panic events, these are long-term macro investors. And when the supply changes hands from these weak retail investors into the hands of the whales, you want to talk diamond hands, the whales have diamond hands. So if they're holding it off exchange on a ledger, what's left to trade? The answer is nothing. So if there is a very small amount of supply available to trade, and there's an increase in demand given the bullish stories that we saw with PayPal, that we saw with Tesla, that we saw with, you know, name it, there was a bunch of bullish stories pushing the demand characteristics of the crypto markets. The only result that you have is markup, because people are in a bidding war with this asset to try and get their hands on it. So there was a transition point here. Basically right here, we were seeing a decrease in the overall supply. This was basically just being the supply further being absorbed in the market, and we weren't crazy in this area. We weren't crazy until we got here. Then DeFi became a thing. DeFi got really crazy through the DeFi summer, and we got another shakeout event after all of the nonsense of people making ridiculous yields on all these DeFi protocols, but that's another story. And that kind of signaled another high volume event that really kicked off the market. And that's when the PayPal story started coming in and all of the really bullish narratives began to come in. And you'll notice in the volume, it's going up. So the dominant force, as we suspect it, is demand. So demand is beginning to trickle in, it's trickling in, it's coming in, until we get to this candle right here, which is the preliminary supply. Preliminary supply is the point at which the institutions begin to offload their shares. We had a bit of a stall, we had a bit of a shakeout at around $40,000. It was a doubling from the all-time high. It was a tripling or a quadrupling, which is not something that a lot of institutional investors are used to in it was not a very long period. If they were buyers in the COVID shakeout, they're looking at less than a year, 300 days to basically 5x their money. Institutions are not used to that sort of return, and they are forced to kind of rebalance. But beyond this point, what happens to the volume? So we're here at the preliminary supply. The order books do continue to mark the price up as the space by this point is really bullish and just over exuberant, and there's a lot of faith in cryptocurrency. You know, there's a common misconception that people believe that the amount of capital injected into the space is what causes the price to go up. It's not. The capital and the market cap is completely separate from the price. The order book decides the price. So as long as people are bidding up the order book, as long as there's a lot of market orders and a lot of high asks that are getting filled, then you're going to mark the price up. But look at the volume. Volume's just completely dying off. So the demand's waning, even though we are increasing in price. That's effectively a bearish divergence. We saw a bearish divergence in the volume characteristics as demand was kind of tapering off, as well as the RSI. So the RSI is showing you the relative strength index. So the rallies were shrinking in their strength, and the reactions were actually increasing in strength. So you can see this rally right here. Let me actually clean this up a little bit so it's a little more clear. My charts do get messy as I do a lot of hand drawings.
I'd be like that.
Hey, while you're doing the drawing, I just want to scream so loud, man, because you hit the nail on the head, man. Everyone is like, they don't know what's going on right now, and we've been trying to tell them in the Discord, like, this is all the way the smart money handles their assets right now. And so, that's the reason that Brad and I are able to make these trades and make these calls, because we're trading this like we would trade a normal market, like the futures market. And this is how big money plays. They're going to rip through buy stops, rip through sell stops, make you shake. They're going to turn you upside down, shake your pants, and drop all these coins because they know you're scared. And so, this is what we're trying to tell you guys. Like, you can't just expect this thing to go from 38 to 60 tomorrow. This is going to bounce around, play around. It might go up, it might go down. But we're taking these short trades in between time because we're going to play it like the market makers and play like the big money does. So Baloo is just all over this. He is hitting it.
Yeah. And I would also kind of offer a contrarian approach, because everybody looks at manipulation as something that's malicious. They think these guys are out to get you. They're out to steal your money. And the big whales, the large whales, they're not. What they're trying to do is they're trying to fucking take profits. When we're talking about big money, like if we're in a trading range here and I'm a whale, okay? Retail, they'll see a reaction and they'll get scared and they'll kind of want to sell into that fear. They may be way up and they're like happy about it. It's like, you know what? I was up on the position. We're kind of reacting down. I'm okay to take profits on a reaction. It's fine. I'm way up on the position, whatever. Whales can't do that. If whales get to the bottom of a trading range and they sell, it tanks. The market becomes illiquid. They lose a ton more profit. They're forced to sell into strength. So while the market was hot, they were able to offload some bags here. The supply needed to be absorbed. The overexuberance of the market needed to take back over. Then they got another opportunity to sell. They have to sell into strength because they have to have buyers. Then we react down. They can't do anything. They let it drift. If it looks like it's going to fall below the range, they may even step in as a buyer to help prop the price up so that we can get another up thrust. Then they get another up thrust. They're able to sell again. And it's very strategic. And it's not about you. It's about them trading in an illiquid market and them really having to control the price action so that it doesn't collapse on them, because they've made a bunch of money and they can't really exit the position without, being noticed. These guys, they're noticed. Their footprints are all over the chart. And, it's just about stepping back and understanding, supply and demand and the price objectives of the large investors. A lot of people, when they come into crypto, they're here because they want to be a millionaire tomorrow, but the whales are billionaires. They're multi-billionaires. And for them to get a 5x on $1 billion, yeah, they're going to take profits. So, everybody has different price objectives, and you often find yourself, counting your coins and wishing, like, is this going to reach $1? Is this going to reach $10? And, you're counting your chickens before they hatch. And all in the meanwhile, the whales are happy to take 20%, 20% on $1 million, $200,000. It's not bad. It's not bad for a day's work. So their time parameters are a lot different. They're a lot different. But I do want to point out, this is a very high volume event happening at the bottom of a logarithmic channel. So if ever there was a place for us to kind of bounce, I think that this would be it. I don't know if I directly answered the question. Oh yeah, no, I was talking about the rallies. Sorry guys, I'll shut up in a moment.
No, it's good info.
So, we got a strong rally, weak reaction. Strong rally, same reaction. Weak rally, stronger reaction. Weaker rally, stronger reaction. So those are characteristics of a distribution. Every rally is just losing its momentum. Every reaction is gaining its momentum, and that is that transition period where you're really kind of needing to pay attention, because a healthy trend always increases on the rallies.
So would you say the Wyckoff method's not really pertinent to Bitcoin in the past because smart money wasn't really involved into the market?
I think there was just more volatility in the past because you had whales that may not have been savvy investors. But here's the thing about being a whale. You learn quickly why you can't just dump into the market, because you may find yourself, trying to do a market close as a whale with, back in the day when you had 10 million fucking Bitcoin or whatever the case may be. You do a market buy on that, you blow through the order book. You completely blow through the order book. And what happens? We've seen it all before on some of these illiquid exchanges and some of the futures exchanges. It's a flash crash. If there's no bids and you blow through the order book, it goes to the bottom. They can't do that. They learn the hard way that they can give up their entire stack by, selling. So they need to kind of be careful with that.
Yeah, it's like playing poker. You might as well just show everyone your hand, basically, because when you're in that order book, that's what you're doing. You're putting it out there for everybody. And then once the order prints in the footprint chart, and you see on time and sales, then you know for sure that size player was in there. And just like you were saying, like they bring the market up, they pull it back down, they buy back. That happens on a day-to-day basis in the day time frame. I mean, you'll see the market rip up. They'll get buyers, sellers scared. They'll exit their positions, and they'll turn around and do the opposite. They'll bring the market back or up or down, whatever their objective is for the day. So
yeah, I feel like a lot of the more malicious moves come from the exchanges and the market makers, but there's also like a huge amount of whales that are just participants in the market, and they're a lot more strategic with their entries and exits. But the market makers, they want to see you bleed. Market makers and the exchanges.
Yeah, that's
everyone else is looking for 20%. They're looking for like 1 or 2%, just 1,000 times over.
They're looking to just cover. They're looking in some circumstances to just hold a short because everybody's long. So they'll just put $1 billion in a 1x short contract and just collect premium for 4 months, and then take the premium that they got with that 4 months worth of funding rate, and then just flood it into the market as a spot sell, dump, and their short becomes profitable, and then they close the short out. You guys have no idea how easy it is to move this market.
You got a lot of money. That's the easiest way to trade right there.
So
there's a lot of power.
That's pretty good though. That's awesome, dude. That's so awesome, because there's so much stuff that kind of like that you went over that it wasn't the Wyckoff method specifically, but over like we went over market psychology and things like that, and a lot of the stuff that you said coincides, like selling into strength, like how when the price goes up, like that's when you should look into selling, and how when the volume spikes up and the trend's not going their way, they maintain the price, things like that. And especially like the market maker aspect, like about how the exchanges are the ones that really move this the most. Like it's kind of like there's just so much stuff rhyming with what we've been preaching to these guys here, and I knew you were going to be a great guest at explaining this method and give some confluence to the psychology we've been preaching, because that's really like this. That's the game, the psychology, the psychological aspect. It's like, how can we, it's not necessarily that they're trying to screw us over, like you said. It's just that they run the game, and you just got to.
They're playing a different game. They're playing a different game that typically fucks retail.
Yep.
And it's not necessarily malicious. Sometimes it is, but sometimes it's just them having to manage their own portfolio. We're here managing our portfolio, but when you're swinging a big bag around, it's a different game.
You
gotta get them with that yeet. People be going long, and the prices goes freaking like 50% down.
Yeah.
That's where Bitcoin Brad and I, we're trying to change everyone's mindset, because everyone's just thinking hold on. But you got to think like the people that have the big money, and you got to kind of follow the plays that they play. So you got to find the way to interpret the charts and things like that. And so this is another great way to look at things. So it's just it's all about following the smart money, because they're the ones making the moves. We're just riding their coattails for a little bit.
Exactly. Yeah. So so a few questions, Baloo. So for new traders, what do you recommend they should start with this method? Like, how do you think they should approach educating themselves properly and utilizing this to its utmost potential?
Well, if you're new, like bought your first crypto up here new, my first recommendation would be don't go too hard, because you're already in the wrong spot of the market cycle. And that's probably not what you want to hear, but I'm going to tell you straight how it is. You're in the wrong part of the market cycle. If we go back to the Wyckoff's market cycle, the structure of the market, of the price cycle back here, Where are you? You're buying in the distribution area. So if that's you, that's okay because you're here and you're learning. Just don't put too much money on the line because you're at the top. Potentially, we might get a turnaround, but as it stands right now, we're in the area of distribution. So you already missed out on the best time to position yourself alongside the whale. So your risk is way higher than it should be. So because your risk is high, make sure that your position sizes are small and take your time and learn. I would say if you're interested to teach yourself this method, it requires some study for sure. A lot of this stuff is available on the internet for free. If you do join the free side of the Discord, we have a lot of this information curated in one spot under the learning materials tab. It's just, open source free stuff on the internet that I've just put in one place. But along with that as well as we do teach. So I have my own Wyckoff training course. You can come in to VIP. We have coin setups, which full disclosure, we're not posting very many setups right now because there aren't any. And we've got, the self-guided video programs. We've got a whole bunch of video material, as well as 3 times a week, we do a virtual classroom where you can ask questions and have these kind of close to one-on-one sessions.
Nice.
You do get direct feedback for information that you're looking for, regardless of where you are in the world. The chat is open 24 hours a day. You can post your questions in the chat, and even if you're not around to see to participate in the live classroom, we'll go over those questions. We record those, and you can watch the recording the next day.
Nice.
So we do offer those services as well. But there's plenty of opportunity in this space to self-guide and self-coach. But if you are going to go that way, please be careful. Know where you are in the cycle. Where you are in the cycle is in the bullish case scenario. In the bull scenario, you're somewhere in the middle. And in the bear scenario, you just bought the top. So please just understand where you are in the market cycle and wait for the golden opportunity that will come again. This is called a cycle for a reason.
Hell yeah. So guys, definitely check out his Discord, right? If you guys want to follow up more with this method and just, embed it into your psychological play style. I've posted it in the chat. I can go ahead and post it on there a few more times. I tagged everyone.
In there. Let me get in there.
Yeah, I got you. I put it in the chat. I put it in the Discord and added everyone so you guys can check it out there. So right now we're going to transition into a Q&A period, guys, specifically for Baloo so we can get some questions out and wrap everything up because I know he's busy. He has his own YouTube as well. He has stuff going on. So again, guys, show some support. Check out his channel and, super smart guy. And I guarantee you there isn't anything on there that is, not going to be of value. Everything in there is going to help you out and help you build your collective knowledge to make you a better trader. And at the end of the day, I mean, realistically, as a trader, or hodler or whatever anyone does really with their money, you never stop learning. Hey,
I got sorry to cut you off, man. I got one really good question in the question section. It's no credits left. And I think this is for you, Blue Man. It says the one difference between Bitcoin and other commodities is the halving. How will that affect now that the whales have manifested the Wyckoff schematic into the 4-year cycle? Good question, no credits.
I think it's too early to say that the 4-year cycle has been disrupted yet. I think that if we compare what we're seeing to previous cycles, we've had these large retracements in the past. So we don't know if the 4-year cycle has been debunked yet. So I don't know if that's what you meant, but there's another characteristic that goes into the 4-year cycle, and that's the supply shock. So given the fundamentals of supply and demand, when there is a tightening of supply, and there's 2 ways that we can tighten supply. We can tighten the supply with the whales accumulating in the accumulation zone. So down in this area right here, the whales were accumulating Bitcoin in the accumulation zone. But throughout that as well, we also had a halving. So the halving contributed to the supply shock as well. So now the miners have less supply. So they're kind of heavy-handed into not dumping supply into the market, because as it stands right now, 6.125 Bitcoin are flooded into the system every 10 minutes. That's a lot of Bitcoin. It's still a lot of Bitcoin. So the miners are still a huge contributor of supply. And when their paycheck gets cut in half, and they're used to the cyclical nature of cryptocurrency, they just stop selling. They just won't sell it at a loss, and they'll hodl it until it's reached the market value that's appropriate to keep the lights on. So the 4-year cycle is very much so still applicable, I believe, for those two reasons, both the institutional interest of accumulation as well as the timestamps of the miners getting a pay cut every 4 years.
Exactly.
Hey man, you just got a new subscriber, man. I just came into the Discord, into your YouTube, man. It's good info.
Right on.
Yeah, it's a lot of good stuff. Brad, do you have anything you want to add to like the overall idea of this method? I know you haven't really used this method too much. What do you think about it?
This is one of the methods that I actually enjoy, I guess, because it is based a lot off of structure. Unlike a lot of other methods where they're based off of a Fibonacci or a touch of a 21 EMA, this one is actually factual based, and it's been back tested for a very long period of time. And the biggest thing for me, like I'm a structural trader. I trade off of structure, and so this is one of the methods that's out there that really depends on structure. And any successful trading style is going to be a structurally based trading style, right? You have a lot of trading styles that are based off of momentum, and that's great. And it's obviously worked great with Bitcoin and with a lot of the cryptos, because we pretty much just been on a bull run for like a year straight now. I mean, even longer. But now we're seeing a lot of retail traders lose money because they are not being able to use this momentum indicator or anything like that. So digging in deeper, learning some structure, and this is definitely something good to learn. You always want to have, the more tools on your belt, the easier it's going to be to build your house, if that makes sense.
Yeah, Brad, I want to echo that as well. The trading method that you land on, because everybody's different. It doesn't have to be the Wyckoff method. You don't have to be a momentum trader. You'll pick and choose. You'll dabble with a few, and you'll land on the one that fits. But all of them require a trend, and the trend is the structure. So if you're not making higher highs and you're not making higher lows, these MA crosses don't matter. These triangles don't matter. If the trend is working against you, your trade is working against you. So you have to really take into a lot of consideration the structure that's being presented to you, and don't just be angry with the fact that maybe you're showing up late and you just want things to be bullish. You have to look at it neutral. You have to look at it unbiased. And if the structure is structurally pointing down, the setups you need to be looking for are shorts, bearish setups. And if it's structurally looking sound and we're headed in the right direction, now you can get in there.
Yeah, that's all you get.
Exactly.
It's all good info.
And that's the thing is and the people in our Discord know this. The other day, we took a nice short trade when every other, big time crypto traders out there were saying that, we're about to bounce to the moon, right? We were, I think we were right up around like 40K after we came back up, and everyone's like, oh, this is showing us whatever it's showing us. And then the big green dot is showing us this. And then, I literally posted in the Discord like, hey, I'm going to go short. And then C137 called me and he's like, hey, bro, good long setup is going up. Right. And I thought he was messing with me. I was on my way to the grocery store and I thought he was just like messing with me. And I was like, dude, I just posted that I went short. And then, it ended up working out, and it was just simply based off of structure. That's all it was based off, nothing else. It was just, it looked like the structure was breaking down, and it, just happened to play out. So it was nice.
Yeah. And, there's this method, the Wyckoff method, is fractal in nature as well. So there was a distribution up here if you're in the smaller time frames. So right here, we have another kind of distribution schematic that played out, and it wasn't until we got that breakdown here, the LPSY, we had our two up thrusts. The up thrust made a lower low, we made a lower high, or lower highs and then a lower low, and then we broke through the structure, had our bearish test, and this bearish test was it. And then you enter your short position and head down. So it works on many time frames. It's better to involve volume because, you know, this is tracking the large players, and the large players play the large time frames. But you do have people, you know, with large balances in these smaller time frames as well. And it's just looking at the rallies and the reactions, and you can see what's going on with these rallies and these reactions, and you can kind of determine health. We're coming up against resistance. The rallies are shortening. The reactions are widening. It's looking like we're heading down, even though it's a much smaller sample size.
Yeah, that's another thing, you know, saying in the Discord too, you know, especially today about volume. This is a 3-day weekend. The people that are making money, they're not trading today. They're on vacation already. They already went to the Hamptons. They already went to, you know, whatever mansion, whatever vacation they have. So Friday, Saturday, Sunday, Monday, they're not going to be doing much. So it only takes one size player to move the market. They can rip the market up, and they can rip the market down. So whatever direction they choose. And then when the big players come back in, you know, Tuesday or whatever, then it'll, you know, be, you know, price battle again. And, you know, you'll have movement all over the place. But when there's low volume like this, it only takes one key player, one size player, just to do whatever they want to. And it sucks to be. So be careful this weekend if you guys are trading.
Mm-hmm. Yeah, true that, definitely. Because I mean, there's, you know, this happens on the weekend all the time, where like you said, that one giant player comes in and just moves the market because everyone's already chilling, drinking their Coronas by the beach and shit, just relaxing. You know. But so for the BLX, I saw you go over the BLX. So what do you recommend for people utilizing this method or analyzing the price? Like what do you specifically you know, what would you look at when you look at the BLX? I know you went over volume and a few more other things, but are there any other things that you can do with the BLX that would, you know, give you an advantageous perspective in the market, Baloo?
I just like that the BLX is Bitcoin indexed across the market. So, you know, if you take a look at some other places in the market, like I can't pull it up right now, but you know, you could go and look at the funding rates of different exchanges. If you're on BitMEX, everybody trading Bitcoin is slightly bearish. If you're on Binance, everybody trading Bitcoin is slightly bullish. So the characteristics in the volume are going to be different because they're structured. You know, the rallies are going to show more volume because you got more bulls over there. Whereas you're on BitMEX, the rallies are going to show less volume because you got more bears over there. So the BLX is great because it indexes all the information into one daily candle so that you get an average across the entire sector. The disadvantage is it only prints one candle a day and it's not live. You know, you get one candle a day. So that's it.
Okay.
But from a macro perspective, it's a good place to be because it's going to give you a more fair and honest approach to what's occurring in the market.
Okay, definitely. I hope you guys have been paying attention. A lot of good stuff. So we'll just answer these last few questions, Baloo, and then I'll push some of our community members over to your Discord so they can check out all that great information. And I know you got a YouTube as well to take care of. And then, you know, after that, man, if you wanna take off and handle your business, bro, you know, it's all good. You know, man, I really appreciate, you know, you showing up. So you want to do a quick Q&A?
Yeah, I'm down.
Okay, for sure. So we have Chris saying, do you think that we are in complacency stage, like a 2018 dump, or more like a double bubble situation similar to the 2013 cycle and in the accumulation stage?
So I'm assuming we're talking about the market psychology of a market cycle, the Wall Street cheat sheet complacency stage. It's very much so possible. We can't be blind to that. Do I think that this market cycle would be very different from all of them? Well, I don't think. I know it would be very different from all of the previous market cycles, but we are in a different market. We have different market participants. We have some more traditional players in the space that may not want to see the same sort of cycles play out. So could we be in the complacency stage of a market cycle? The short answer is yes. The long answer is you need to explore all options and try and determine how you would like to position yourself alongside of that. So if we're in the complacency stage, I think we'll probably, I think we would have seen a dead cat bounce by now. I think we would have had a more exuberant reaction to the upside by now. typically when you're at peak euphoria, people are ready to get back in there right away. People lost a lot of money, but maybe, nobody's selling. I think a lot of people sold into this one. So they're just like selling and they're sitting in tether and they're waiting to see what's up. So we're not getting that V-shaped recovery. We're not getting that dead cat bounce. So to me, that's almost a little bit better. Now, if we start breaking down from this level, I'm going to start to get worried because we're going to break some key structural elements to this cycle that's going to make me lean pretty bearish. And I'm going to be trading very much so on the short side to kind of get my portfolio back up to what it was over here. We're not all perfect. I did short from that point, but not nearly enough. Overexposed to altcoins, as a lot of people end up when you're in the euphoria stage. But yeah, anything's on the table right now. Anything's on the table. The only bullish comparison that everybody's talking about is just the fact that this cycle is different and it doesn't look structurally the same, but the facts are the facts. And the facts are we have a lower high, lower low structure. So we're in a downtrend. We're in a localized downtrend. We can't deny that. So complacency, possibly. I am not at the point of capitulation just yet. I'm not at the point where I'm going to completely flip and restructure my portfolio bearish. But you're absolutely spot on to be thinking that it is a possibility, and don't become complacent.
Yeah, straight facts, straight to the point. You got.
And then if I could add something to that real quick too. One thing that Blue's talking about when it comes to that index, right? That's how we trade in the traditional market. We track the indexes in order to correlate them to the traditional market. And so, adding that is just another tool to make sure that you're following, something that's going to actually lead you in the right direction. And then as he's alluding to, managing the risk or understanding how the market is trading, you also don't want to be caught on that opposite side. If we do start to trend up and we start to run up, don't just keep shorting it, expecting us to just go to zero, right? Follow the trend and trade the market structure.
Yeah, I think shorting right now are short trades, like very short time preference, very aggressive. Put your stops, sit there for 15 minutes on your entry, get a good entry, and when you got it, move your stop to break even. We're in a choppy environment. There's no point in losing capital right now. And we missed the move. If you didn't short this, you didn't short it. So it's gone. We don't have that much open interest in the market right now. And the open interest in the over leverage is where you get those crazy moves. So open interest is really low. There's not a lot of fuel in the tank. So if we did start to dump here, it's not going to be like this. I really don't think it will. I think it'll just be a bearish trend that just is relentless. If anything, would be more feasible, I think, for me. A lot of my emotion, and I will preface this by saying it is my emotion, telling me that I don't feel that we're quite there yet. I can back that up with a little bit of TA. So part of the Wyckoff method is we do these charts that really haven't been done in a very long time called point and figure charts. Point and figure is one of the original styles of analysis. It's basically, X's are up and O's are down. It's very old school. You used to have a ticker tape, and as the quotes came out of the ticker tape, you were manually drawing your chart on a piece of grid paper. Very old school. But part of the Wyckoff method is they did kind of develop a way for you to kind of do a count on the consolidation to give you a price objective. So given that we feel that given that this is a distribution and we've confirmed it as a distribution, we can actually do a quick count on it and get some price objectives. So if I just go ahead and do a measurement here from the beginning of the bar of the distribution over to the bar where we had the breakdown, it's about 15 bars wide. So we've got 15 bars in the distribution on the point and figure chart. You're then going to take those 15 bars and you're going to times it by the box size. So we have a 500 box size, which just means that every one of these X's is a factor of $500. So every time Bitcoin goes up $500, you draw an X. And then every time and then you have a 3-box reversal. So every time Bitcoin goes down $1,500, you start drawing the O's. Very old school, just a crash course here. So we take the 15 bars times 500 times the box size, which gives us 22,500. $22,500. Okay, so that's the value of this consolidation. Then we're going to take a measurement from the top, and we're going to take a measurement from the LPSY, and we're going to minus $22,500 from the all-time high peak and $22,500 from the point of the breakdown. And we end up with a range of $41,000 to $36,000. Oops. And that's where we're trading. That's where we're trading. So our downside price objectives, as far as the distribution, is actually met. We've met our downside price objective. So what happens here is we need to stop, we need to look, and we need to listen. So we need to watch for data to come in. We need to wait for the candles to print so that we can have a better understanding of what the next move may be. But, you know, as it stands right now, as far as the fuel in the tank, the fuel of the downside move that we were, the effect, it's one of the 3 laws of Wyckoff, is the cause and the effect. So the fuel that we have in the tank, as we got from this 4 months of distribution, has been exhausted to our downside targets, and we're trading in that area. We're trading, I think, well, we're probably below 36,000 right now, but we're right around that sort of general area. Oops, not my pen. Don't need the pen. So I think that's good. I mean, it's good that we're kind of down in this area, because we're testing, we're doing all the appropriate tests, we're trying to find support. And if we can hold in this general area, you know, maybe we can get some information that's going to tell us that there's a possibility of a reversal. But I don't think we're ready to just melt down just yet.
Nice. See, guys, boom. See that? Like, it's not just a literal overlay that you just plop over the price and say it's gonna go down. There's a lot more that goes into it than just, you know, one schematic's worth of information. You know. Don't get me started on how sour I am that there's a YouTuber that has 150 fucking subs after I've been doing this for a long time. Yeah. And he just plopped a drawing on top of it. I saw that video.
Yeah. I saw it go to 30,000 subs, and I'm like, what the fuck?
Yeah, it's like,
I've been doing Wyckoff for so long. Like, what the fuck? And the problem was I wasn't calling the bearish shit, because I was just like, I don't think we're bearish yet. We're bearish yet. And I didn't flip until I needed to flip, but everybody was calling bearish for so long. Anyways, he's at 150,000 subs now, and I'm sure he doesn't know what the fuck to do.
Yeah, dude. Like, you know, you were when you were talking about it, you know, it kind of throws me off, because like, it's like how you were saying, like in the videos, like a lot of these YouTubers, they it's like the market, you know, sometimes when it moves, they prey on that emotional factor. You know, they benefit from the fact that you're in fear, or the fact that you're in the euphoria stage, and they capitalize on that. And they tell guys what they want to hear, and what you want to hear and what you need to hear is the difference between day and night. You know, you got to break that psychological barrier.
Yeah.
You know,
the highest liked YouTube videos are the ones where it's preying into the emotion of the day. If everybody's scared, it's a scary video. If everybody's greedy, it's a greedy video. And that's just the way it is. It's a feedback loop. The YouTube algorithm creates this. You're far better off understanding the behind the scenes of the creator's point of view. You know, I could do a video saying, hey, here's how to structure your portfolio for a 10-year plan of wealth building. Or I could do, here's how you make $100 a day every day.
Yeah.
And you can guess which video is going to do well.
We've all seen that guy's video on there.
Yeah, it's just kind of the way it is, and it's kind of a shitty thing, but it's because, you know, the market is, don't be part of the herd. Yep. The herd drives the algorithm, and the algorithm preys on those two human emotions of fear and greed. Yep. And it's whatever the day is. Exactly,
guys. So the final question we're gonna be, guys, I'm gonna ask this final question. If you guys have any other questions for Baloo, check out his YouTube. I've spammed it. I spammed it like at least 10 times when I put it on there.
Oh, thank you.
Oh, dude, no problem, man. You know, this is what crypto is about. You know, that that a lot of people don't realize. Like you were saying, you have these guys that prey on fear and greed. But at the end of the day, in crypto, honestly, everybody wins because of the fact that it's an emerging market, that everyone can participate in it before set in stone rules are established for how they should trade this thing. So
yeah, as long as you don't get wrecked,
yeah,
stay away from leverage. There's a lot of people. You can use leverage responsibly. I use margin on FTX, but I use like 0.03x margin. If you're in excess of 2x, honestly, you're pushing it, and you better know what you're doing, and you better have a good understanding of risk management. Stay in the game, okay? Crypto is a big opportunity. It is one of the few markets that actually has innovation coming into it. So don't fucking piss it away by making stupid mistakes, being over leveraged and whittling away your account. Keep your fucking account, okay? Keep it. Play smart.
You're going to have some guys tattoo that on their arms and send it to you on Discord, bro. Entire quote.
You sound like you've been trading with us lately. You sound like you've been trading with me for a long time now. I preach the same thing. It's all about, let's say you win $1 million, or you hit $1 million trade, but then you lose the rest of your trades because you just got lucky. Well, are you a good trader? No, like you're not. No. You're not. And I always tell people, like, gotta manage that risk always.
If you focus on the upside, you'll lose every single time. If you focus on the downside, the money will come. And I say that quite often. It's just, you have to manage your risk. Don't give your capital away. Don't give your Bitcoin away. Focus on protecting, and the money will come. Bulls make money, bears make money, pigs get slaughtered. And that can be, distasteful. A lot of people don't like to hear that one because they think that I'm calling them a pig. It's an old saying, but it's basically just being, don't be greedy.
3 a.m. can tell you about
exactly.
that.
Oh yeah,
I've been to the slaughterhouse a couple times.
It's all part of learning, guys.
We're trying to
tell you not to make the same mistakes. So you guys are here. I can tell you a million things to do, but
the temptation.
You're 100% right.
Temptation's crazy out there because the YouTubers are pushing it hard. I don't know if you guys know much about the Bybit affiliate links or how profitable they are for some of these YouTubers, but Crypto makes like $50,000 a day on those fucking links.
And
he's pushing them. He doesn't give a fuck.
Hey,
he doesn't give a fuck.
Yeah, what would I'm new to the crypto space, man. So what would you say is the best exchange if you're gonna day trade crypto on?
I would say it's Bybit. If you're going to day trade with leverage, I would say it is. It is Bybit. You got to be smart. I'm talking 2x leverage.
Yeah, exactly.
And that's like being.
Okay.
The reason I like Bybit is just because it's coin settled. So if we're talking futures, if we're talking, contract coin settled futures with leverage, I think Bybit has a good user interface. For everything else, I use FTX. I love FTX. FTX is kind of my go-to exchange. And separate your capital into different buckets. So I've got my HODL. The HODL is not on an exchange. It's on a wallet. Okay. The HODL is on the wallet. Don't fucking touch it. It's your investment. Hold it for 10 years. You're done. There's nothing more to think about. And then you have your second bucket, and that would be basically my FTX account. So my FTX account is my spot trades. It's my light margin account. It's the account that I have flexibility with my swing trades, but it's all really calculated and slow swing trades. And then you have your high risk kind of day trading, intraday trading account, and that's Bybit. Keep it all separate. Keep it separate so that there's never one pile that can be taken away from you.
Exactly. Never, let's say, never keep all your eggs in one basket.
Yeah.
So we'll go over this final question, and then I'll let you do what you got to do, brother. So I'm gonna read you this final question.
Okay.
So Krishan, he's asking, so what do you think of other models? For example, the stock to flow. What do you think about those? Being a Wyckoff method trader.
Okay, so I actually really like a lot of the on-chain stuff. You know, I subscribe to Glassnode. I pay for Willy Woo's newsletter. I'm a big fan of the on-chain metrics because they are interpreting the amount of available supply on the network. The thing about the on-chain stuff and the thing about the stock to flow is it's a lagging indicator and it's not really applicable to you right now. If you're a trader right now in this market, the technicals coming out of TradingView and the technicals on the charts that we're looking at with the price candles from the market are much more applicable. If you're a macro investor, if you're looking at the big picture and you're looking at areas of interest for you to become a spot buyer for your long multi-year holds, the on-chain metrics, the stock to flow, all of that is fantastic. And I think that stock to flow is a really good model. I personally think it's too conservative and it will be broken. But it's fantastic stuff. I love all the on-chain stuff. And we have a huge advantage here in cryptocurrency to be able to mine this data of on-chain analytics. It has its place for sure.
Okay, there you guys have it, guys. I wanted to give you guys, another YouTuber's perspective on the Wyckoff method, because I know a lot of guys they seen it on MM Crypto's thumbnail and everyone's like talking about it, but I've seen that you definitely went in depth into it and how you seen it being that you actually specialize in that method. So guys, go check out Baloo's channel. It's in the description. Check out his Discord as well. I have everything on our Discord, so just go ahead and go to the stream updates tab. Check that out. Matter of fact, I'm going to go ahead and put it on here a few more times. But again, guys, it's always good to have a community built and to have an arsenal of information, right? If you guys, which I'm actually active in his Discord as well. If you guys go over there, you'll find there's a free PDFs version that has or free PDF channel that has everything that you guys need to get started. And if you guys find it useful and it is a method you want to trade, he also offers more advanced courses and more advanced techniques that you can find over at his channel. So make sure you guys check him out for sure. Super knowledgeable guy, and had to have him on the stream today to give you guys some more information. Yeah, no problem, man. Is there anything you want to add? I mean, you can hang out if you want, but I'm pretty sure you got some stuff going on, man. So if there's anything you want to add.
I do have to hop off, but just understand what you're in. Understand that most of the money is made in the big swings. If you're new to crypto, don't fall into the trap of thinking that you don't have enough money and that your stack is too small, so you have to risk it. Your stack won't be too small. You just have to give it time. There's a huge problem inside of markets with asymmetry where there's this notion of survivor bias. Everybody hears about the success stories. Nobody hears about the 99% of those that fail. Don't think that it just happens all the time. Crypto can happen to you, but you have to let it happen to you. You can't go and find these opportunities hoping that, you'll hit a 1000x coin or whatever. You just have to kind of be involved, be in the space, learn to identify opportunities, and capitalize on them responsibly. And don't forget about Bitcoin. It's a big one. A lot of people aren't buying Bitcoin these days.
Yeah. Hell yeah. Yeah. Well, man, it was go ahead, James. Go ahead.
Oh no, I was just gonna answer the last one. Piece of string theory, man. Hey, so Wyckoff's not an indicator. It's just gonna be learning market structure. So what Ramon said, go check out his Discord, man. Check out his PDFs and stuff like that, and then you can all YouTube it. But he's got everything right there in his Discord, so check him out, and then you can learn the method. It's all about market structure.
Yeah.
Hell yeah. So, are you saying something, Brad? I feel like I cut Brad off. Somebody went and then stopped talking.
No, my mic's been off. My bad.
Oh no, you're good. Do you have anything you want to add, Brad? Before Baloo hops off the stream.
Oh no, we've kind of been holding him anyway, so
man.
Holding him hostage.
Yeah, dude. Go enjoy the hot tub, man. Get some drinks for us.
Yeah. I'd like to hit you up later, Blue. We can chat. I'd like to look more into that, and then we can, use it with market structure and stuff. I think it'll work nice.
Sure. Sounds good. All right. I do got to hop off, guys. So please enjoy yourselves. Trade safe. We'll see you out there.
Hell yeah. Take it easy, man.
Thanks, Kevin.
You as well.
Nice. Super knowledgeable guy. I had to have him on stream. So guys, that was the Wyckoff method. As you can see, right, it's not as complicated as it's meant out to be. It's in phases. Everything in phases is easier to understand because of the fact that you're able to break down the data into separate pieces, separate chunks, and process everything. So definitely check out that method if you want to learn more market psychology to stack up on top of what you guys have learned from Brad so far. Brad, would you like to run over some of the call outs that we did on the Discord?
You go ahead and run over those. I got to take care of something real quick, but then I'll jump back on.
Okay, for sure. All right, guys. So we're gonna go over a few trades just to show you guys what we've been kind of putting out. So on the channel right here, we have this little nifty. Where's it at? We have this little nifty channel right here, potential BTC trades. And Brad pretty much he does very good in-depth TA. We come together, we see what's going on, and I mean, you know, we post this information out here for you guys. And for anyone that's trying to trade, I wouldn't just take these indicators, these signals, as a buy or sell signal. I would honestly just embed the fact that whoever posts their trade on here, whether it be me, Brad, or James, you know, I would confirm with what you currently have existing as far as market structure and everything else, and see if it lines up with your narrative, you know. And if Brad says that he's shorting and you're going long, right? Well, you know, don't go short because he said go short. Try to see if you can disprove, or, you know, you can invalidate your long and then go short. But again, at a minimum, include that opinion and that idea into your already existing analysis and make an unbiased conclusion as to where you see the price going. It'll just help you out a lot more, help you see things, because if you see an experienced trader say, hey, I'm going short here in this price, and you're about to go long, then at least you can look at your market structure and you can change your psychology a little bit and see it differently. You know, it's all about taking that red pill. You know what I mean, James? It's all about taking
red pill all day, man. Sorry, just over here eating salad, you know, trying to get through the summertime, you guys. And I'm a little late, you know, about a couple months too late.
Hell yeah. So we'll review this trade right here just so everyone can see. Right, Brad said I'm short 35,665. This was at 142 today. And we have over here on the trading view, right, we seem to fully, you know, done a reversal. So the overall move right here, so I can click on this, 35,665. So from the time of shorting to the time,
you're sharing the Discord still.
What was that?
You're still sharing the Discord screen, not the trading view.
Am I?
Yeah.
What the heck? Oh, it might be a little laggy on the. Are you watching the stream?
Oh yeah.
Oh yeah, it's a little laggy. Yeah.
All right.
No, you're chilling. So from the from when we hit this red candle right here, right? Brad said the signal, hey, going short, you know, and we shorted. We had a lot of strength in this candle, and it was a 2.7% move. So we kind of like met some good profits right there. The ones before it, I have another one right here, right? This was we entered a short. We did a short at 39775, and this was the results, right? It's an 8% trade total, right? Without leverage, you know. So, you know, an 8% trade, right? You know, I leverage can wreck you guys, you know, pretty bad if not used properly. But if you guys use proper risk management and you're experienced, right, this could have potentially been a higher trade than an 8%, like, you know, at a 10x leverage, for example, right? Which I know is very common for people who use Bybit, and we recommend lowering that leverage a little bit and understanding principles. It could have potentially been an 80% return, potentially, right? Depending on how you manage your risk and evaluated your trade as we continued. But again, guys, we have this channel on here that has everything that you guys, need to see as far as big market moves, and it'll just help you out with your analysis. You know, see it as a way to better your analysis, and see it as a way to continue adding onto your toolbox. Is there anything you want to add, James? Because we can probably just leave the stream and end it for the Wyckoff method portion, and you know, we can just kind of get together, group up, and stream again later on today.
No. I think we're good right now. We'll let. I think Brad's getting ready right now.
Oh, okay, he's getting ready. Okay.
And then we can go from there. And then we can talk about whatever. We can rant a little bit towards the end, but
okay.
Let's let Brad get through his thing, and then
don't do anything,
we'll
guys. Don't do anything. I lied. Okay. Don't do it. You're gonna be in for a surprise.
Brad's gonna go over market structure. I just didn't know if he was too busy, but it's all good. We'll get it rolling. Let's read some chats.
Yeah, what we got here. You got to run. All right, Josh. Hey, thanks for tuning in, man. Appreciate it. Good seeing you again. And if you guys hear a bunch of noise in the background, that is the landscapers in my area, so I apologize.
I'd be like that. Guys, do you guys have any... Oh, here, you know, I'm going to post the link to the Discord.
Yeah, I just threw one in. What's it called? Buy and sell signals. Throw it in also into the education.
And then I'm going to post Baloo's Discord as well for anyone that wants to join. Let me just do all this. And then his channel is right here. Channel. What you been up to, James?
No, I'm just actually eating some lunch right now. That's why I'm a little quiet.
Nah, yeah, no, I
Been going all
got you.
day, you know.
Oh yeah.
So,
You know, what's up?
I don't want to be in everyone's ear about it, you know.
Yeah,
they,
no,
they might
yeah.
be hungry too, so you know, I don't want them to get hangry or anything like that. So.
Yeah, I feel you. I feel that, bro. And you know what? I'll take this opportunity, right, guys? We have 88 concurrent viewers. Okay, Brad's gonna come back and go over some really good market structure, guys. You guys are gonna be amongst one of the most successful people that has been around your immediate circle.
Here we go. I got a question here. And sorry if I butchered it, man. Is it Lacaire BPM? So he's asking, Brad, can you do a short summary off what you talked about on yesterday's stream, but show it on TradingView instead of the Matrix? So that's the issue. We can't put it on TradingView yet because right now there's only one web-based platform, that's ExoCharts. Otherwise, you have to pay for another service like Sierra Charts. We use NinjaTrader on top of TradingView and the ExoCharts. So we can't show you on TradingView. We're trying to develop something right now where we can it's basically make it an indicator, but a way for everyone to see it on TradingView because right now it's impossible to. So hopefully in the near future we can get that for you guys, that we don't have to switch to multiple platforms. But if you guys have $29, I think it's 29 euros a month, we're in no way affiliated with ExoCharts, but we use it because, like I said, it's the only thing that you can use for Bitcoin, for anything that's crypto right now, to trade and see market structure, market profile, and without having to go buy software. Like I think NinjaTrader costs about $1,200 for a lifetime license, and if you want to get it monthly, it's about 67 or 76, give or take. So the only way to see what we're showing you guys is on ExoCharts. So that's the only web-based platform right now that offers TPO. So if you guys are interested and want to learn more, go ahead and check it out. We got the templates and stuff for you guys to take too. Oh, he just means a stop loss method. Oh yeah. We'll show you, but that's something still you can only see on the TPO charts, because in a normal candlestick you're not going to see single prints, and you're not going to see where people place their order. You're only going to see the open, the high, the low, and the close of the bar. So that's why you need these TPO charts. That's why you need to see market structure, because you're going to be able to see where people got in at and where people are long from. So you're not going to see horizontal volume on a candlestick chart. You're not going to see the number of orders on that horizontal bar, or for that 30-minute period like we're going off of. So it's a valuable tool. So I highly suggest, if you guys are serious about this. Thank you, Alex. Yeah, 28 years, about $35. So if you guys win a trade, that's easily taking care of that in just one trade. So everyone wants things for free, like we're in this Robinhood age, but you know what, the nice things, the things that make money aren't free. So like I said, not endorsing it by any means, because we're not getting compensated, but like I said, I just use it because that's the only thing available right now that's web-based. So $35 a month, you can try it out for a month. If you don't like it, then go ahead and cancel it. But that's the only way you're going to be able to show the stuff that Brad and I are showing in the Discord, because it's the only web-based. Otherwise, we're going to show you guys NinjaTrader, and I know you guys aren't used to the platform because it doesn't look like TradingView, but for right now, ExoCharts, that's the only thing out there. Yeah, Mr. Kyle. So single prints. So what single prints is reactive buying area. So basically, we can show you later after Brad goes through his stuff, but single prints, like say for a price the other day came down to 31,000. A lot of people jumped on 31,000 because they thought it was a good area. There's value there, so people just bought up 31,000, shopped the price, and leaves these single prints. It's basically where there's no two-way auction. It's just one side is kind of in control, and they're just dominating the auction on the way up. So you have these single prints because price never comes back to test those levels. So that's pretty much what a single print is. So we'll show you more later, and then let's see here. I don't care about small investments in NinjaTrader or ExoCharts. I'm not sure what you mean by that, Matt. Cool. Yes, Brad said we're working on something for TradingView in the future. There's nothing out there officially yet for TradingView. So it's just market profile, which is just going to be horizontal volume bars, basically.
Yeah. It's definitely really good to have those so you can
free.
gauge.
Exactly. That's correct, Byron. If it's free, you are the product. That's very true. Just like anything that's social media and things like that, it's all free because, they're taking your data, they're building a profile about you, they're selling out to people that are, marketers and salespeople. So they can get you, target you for whatever Nike shoes or for, whatever Yeezys or whatever Corvette or Lamborghini you guys are into. But yes, if something is free, you are the product. That is 100% correct. Oh, which one is the best to learn? And which one do you mean by that? Is
Probably like which one has the best user
Ninja Trader,
interface?
exocharts. That all depends what you want to do, Matt. So, Brad and I, we didn't start out in the crypto market. We started out in traditional markets. We started out trading stocks, options, and futures. And through Ninja Trader, you can trade stocks, options, and futures. They also have micro Bitcoin contracts. So micro Bitcoin contract, you only need $50 per contract. So if you have $500 in your account, you can, go back to everyone. This is not financial advice. This is all educational purpose only. But, if you want to go on Ninja Trader, you have more options. But if you're strictly a crypto guy, I would go exocharts. You can trade Ethereum, you can trade Bitcoin, and I'm not sure what else they have on there. They got a whole bunch. They have the Bybit exchange. They have, I think, what was the other ones? They have FTX and a couple other ones. Like I said, I'm new to the crypto space, but all this market structure applies to crypto. And that's why some of you guys are getting run over right now, because this big money is into the market now, and they've kind of just taken over and dominated. So it's no longer a hold on thing. It's a, you can hold on to it and, wait for the future for the things to play out, or you can try and make money in the meantime. But if you're going to make money in the meantime, you have to trade the way smart money trades it. So Matt, like I said, it all depends on which one you want to do. If you want to trade more than just Bitcoin and crypto, I'll check out Ninja Trader. It's free. You can get a 2-week free trial. You can get as many times as you want to just by picking a new email address. You're not going to be able to access the TPO profiles just because it's something you have to pay for the lifetime license or the lease version, I believe. But you can check it out, play with it, see if you like it. But you can actually load Coinbase data on there. You can load TD Ameritrade charts on there and data and stuff like that too. So if you're not strictly a crypto guy, I'll check out Ninja Trader. If you're only crypto, check out ExoCharts. Okay. And if not, check out both. I mean, I got Ninja Trader and I got ExoCharts. So I was probably in stocks, so I like crypto for myself. Yeah, you can definitely do both, and that's the great thing about crypto. It's 24 hours a day. If you want to look at stocks, I mean, so Brad and I, like I said, we started trading futures and we still trade futures. The futures market is it's a 6 day, almost a 6 day by 24-hour market. There's only, it opens at 6 p.m. Eastern time, and it doesn't close until the next day of market close. So, and it closes only for 1 hour just to reset and kind of balance out the books. And then it closes today, Friday, at the end of the week. And it closes basically just for a day and a half, Saturday, all the way into Sunday afternoon. So, if you guys want to check out something that's not crypto, definitely check out Ninja Trader. You guys can trade futures. And like I said, there is micro Bitcoin contracts on there. So if you guys like just Bitcoin, you guys still have options on there too. So I'm not sure if Brad, you ready to start, man?
Yeah, let's go.
Okay, so all right, so that takes a little bit of time. Do we still trade stocks on? Yes. So we got Eric. We have some more info coming for you guys. We're gonna, this is a little prevail into some new stuff that we're getting into. Like I said, Brad and I are not, pure crypto guys. We look at other markets too. So we want to introduce you guys all to the other markets that you have out there. Once you learn market structure, and once you learn how to trade, once Brad gets your mindset right, gets you that red pill, you guys can look at any market and pretty much trade it. You might want to learn little nuances of it, like oil contracts they settle every month, or Bitcoin contracts settle every month, or ES cons, every 3-4 months. But a market is a market, structure is structure, and once you learn to identify the structures of the market, you guys can pretty much trade any market you want to. All right, so that's enough of me ranting. I'm gonna go ahead and give it to Brad and let him go ahead and present.
Hell yeah, let's get it, Brad. Woo!
Hey, what's up, everybody? Glad to be back on the mic. I had a busy day. I was kind of off the desk all day. Had a lot of stuff going on, a lot of meetings, closing out the week for me. And so now we're back, right? Someone was mentioning this BOT's or the BTC's COT report, right? The Commitment of Traders report is something I have been showing you guys basically since I came on the stream. And what this is showing us is where institutional money is getting in, right? This is as of today, I believe, right? Today's the 25th. Or no, this is Tuesday, right? It's because, okay, yeah, so the Tuesday. So this is when the report is actually taken. The report doesn't come out until Friday. So unfortunately, we don't get, as retail traders, we don't get the most recent time. And there's no way to do it, right? Because if it was possible to get it right when it comes out, I would just pay for it and have it and then give it to you guys. It's just not possible unless you have some buddies on Wall Street or something like that. So we see that this week right on Tuesday, institutional money took a 48 long, or they added to their long position by 48, and they closed their short position by 434. So they are at this point net long, right? Big time. Looking probably for some upside on Tuesday, but this doesn't show us what they did Wednesday, Thursday, or Friday, right? And so with that, we just have to kind of try to interpret the data on our own. But it does give us an insight that says like, okay, they added a little bit to their long position on Tuesday, and then if last week when we looked at it, we saw that they completely wiped out their long position and added all to their short position. So this is something that we're getting into, something I talked about last week as well, right? We see leverage funds. Why I said ignore this, because these are hedge funds, right? And what do hedge funds do? Anyone that comes from the traditional market, they do nothing, right? Or they just lose money. They're really good at losing money. That's just what they do. That's why there's not as many hedge funds out there anymore. One of the people that I learned from that works over at S&B Capital, he's like one of the last people that's out there on Wall Street that's actually kind of doing his thing, right? So let's take a look at what happened on Tuesday and see why they were getting into this long position. Let's go ahead and switch over to the daily, and we'll find the 25th, which was this day, right? So they added to this long position. They cut all of their shorts, right? And what did we do? We popped up a little bit, and now we're coming back down, back to the support down here. We weren't able to get to it. This was going to be, a nice running spot for us in the short that we took earlier today. But the good thing about us, in the group is that we're not, one-sided or one-dimensional traders. We just trade whatever the chart tells us, right? If we want to go long, we go long. If we want to go short, we go short. So we've caught some really nice trades this week. Living in the matrix, we're able to see stuff not before it happens, but we just trade it as it happens, right? And I try to call it out as soon as I can. I know today was kind of boring, especially so I didn't really miss anything when I was at these meetings, is because this is pretty much the range all day. We shorted from here, came down. Our first target was these lows right here where we covered some, and then we covered some more right here. We have this nice volume shelf down here, and then if we look back a little bit, we have some more lows down here and another high volume shelf. So that's where we're taking a little bit more of our gains, and then we let one run. We're seeing a nice bounce, right? And we're seeing that these bars here are not really, they're not really coming down, right? We're getting a nice curve up. The thing that I'm kind of looking at right now, which is where this blue line is at, is the top of this bar is pretty close to the top of this bar. But if we go for the CVD, this, we're not really getting up there yet, right? I'd like to see, and if you guys are, that's this bar right here, right? So the top of this bar is right here. Still got a little bit of waves, and this is going to show us that that we're actually getting this volume. We did have a nice stop run since we've been on stream. So if you did get long down here, right, definitely a more higher risk of a trade. So hopefully you've taken some profit along the way. If we run these stops, you can definitely catch a nice move. I'm looking to get long, up here in this 36.5, 37 area, because we're building a lot of stops up here. And this is just, based purely on market structure. I probably won't place any trades this weekend. I had a really good week. We caught a nice 12% move down yesterday. We also caught a nice little 8% move up. So depending upon, how you positioned yourself, and you could have made some pretty decent money. Some people in the Discord, they were in and out, making money and then jumping off, making money and jumping off. So, that's always good to hear. If we jump over to Exo charts, we zoom in a little bit, right? You guys want to see
the matrix,
what's going on here? is, this thing looks like it's not loaded correctly. Let me try to reload it real quick. ExoCharts, the website is kind of slow. That's why I'm not a huge fan of it. I really like TradingView. They have a good platform. And I am trying to get you guys an indicator that we can get on TradingView, right? And so if we watch right here, we're watching the top of I, and the top of C is the same period. So I came up, couldn't open, it couldn't crack that C top, came back down. A opens up here, and now we're popping back up. And so if you guys look at this chart, right, this is the same thing. So this is the I bar that we're talking about. It came up, couldn't crack this top, came back down, A bar opened up, and now we're trying to crack these tops. It's just a little bit nicer to look at on this chart once you get used to it, just because you can see the stop run happens in real time. You'll see these nice little spikes go, and you'll see a nice little pop action, and then see, just like that. So right there, boom, that's a stop run right there, guys. So if you were looking to get in, looking for the stop run, you could have placed your your entry right here. Your first target would obviously be up here into that out of value area. Your second target's going to be up here. Your third target's going to be up here, just a runner. And then you can run a tight stop, right? I run pretty tight stops. You could run your stop down here, which is giving yourself about 500 500 points, 400 points, or you can run a stop if you see the C open right here, a little bit tighter, or you can just run it to the value area high over here, right? So if it comes back down, and you see that what happens right here, we pop those stops, and now we're just trading back down. So there's not a lot of buying going on up here. And so what the market maker does is he runs these stops, right? So people have been shorting all day, and the market maker is just building the position. They built their position a little bit lower, but they're running it up, and what they're doing is they're selling it all up here, right, as much as they can. But what's happening is they're not finding any sellers up here anymore. So now they have to move the market back down, find some more sellers, because they think that this thing's going to break, right? This is how unfortunately most retail traders trade the market, is they just try to jump in at the last second, or after the move is over. And sometimes a momentum trade is not bad. We took a momentum trade over here, right right here, and it was on the C bar when we were getting ready to break this L. This is where I posted the entry. I think it was 35, like 66, 7 or something like that. It was right here, and it popped down. It popped right to the bottom of A, bounced back up. I entered the position, and then we actually got a nice little move, right? If we were to come up here out of value, or up into where this period is getting kind of thin, this is where I would just cut the trade, right, and understand that I lost the trade, and then go back to looking for the long that I've been kind of waiting for all day. I'm a pretty patient trader. And then, I did promise you guys yesterday that I was going to give you guys a little bit of a sneak peek, I guess, or insight, something that I actually teach my traders. And so, that's what I'd like to go over next. But first, let's answer any questions that we have on this or anything else. And then we'll get into a little bit of psychology, like I promised yesterday. So let's see. Ramon, are you checking any of these questions?
Yeah. Me and James are in the chat right now. We haven't gotten any. The only thing that we've gotten that would be good to ask is James replied to it, but I'll read it to you. Someone said, let me see. Are you guys going to do a tutorial on these charts? I do not understand them yet. Says Lukery BPM.
So if we go back to the chart, right, it's fairly simple. I know it looks complicated, but once we set you guys up, you'll see. But these bars are the same as this chart here. So you see this nice long green bar right here. Go over to Exo charts, and that's this K bar right here. All right, and so if we go to the current bar, this A bar, right? That's this red bar right here. See this nice long wick to the top, and then now we're pushing down. are hitting that resistance, which did act as a support in the past, right? Acted as a resistance back here, and then we broke up out of it. It's acting as a resistance again. So we can kind of look and see what happened. We consolidated underneath of it, and we're able to push past it. That's why I kind of like this area up here, this 37, because if we can break above this 36,500, this 37 area, we got a lot of juice up here. There's a lot of stops that are going to add fuel to the fire to send us to the upside. Right, and that's kind of what I was waiting for earlier. We got right here. We couldn't do it. We dumped. We consolidated. We tried to come back up. Sellers came back in, held us under VWAP. And you can tell, who's in control based off, where price is at, right? That's why I said longing from down here can be a little bit more risky. It worked, definitely. But just, this is where you've got to manage risk. So, let's say you got in down here. Let's say you just got in around the 35 area. You just put your stop, right underneath of these bars and understand that if it comes down there, you were wrong and just take a loss, right? That's all it is.
Real quick, I think it's a good moment to pause. Sorry, Jake. So why the letters though? So this is something that started on the exchange floor, man, in the pits. So in the pits, they had a ID card that they wore around their neck. On the back of that, they had little blocks of letters, and they would write A for the first period, the first 30 minutes, B for the next 30, C for the next 30, and so on. So pretty much the market runs from A period all the way until it is M period. So from if the market opens at 9:30 and closes at 4, you get A, B, C, D, all the way until the market closes. So it's just the bars go in order of letters, and that's it. So every bar is a 30-minute period, my man. I think that was it.
Okay. Let me see. We'll take some more questions. Brandy May at C137 says exo charts. Yes, it is exo charts. Everything is making more and more sense over the last 3 streams. Thanks, guys. Exactly. You see right there, guys. That's the way to tackle the market. Is to take one day at a time. Stack the previously learned information together. Compile it into your mindset, and just trade and progress, adding these new strategies in time, little by little, and just follow up and ask questions on the stream when you guys can. We try to give you guys all this. That way you can become a better trader. That's why Mr. Kato01 said everything is making more and more sense, because he's, he took the red pill and he's starting to see it. He's like, oh, okay, like this makes sense. I see what they're saying. And it's going to get to the point where you can develop your own market strategies, because not everyone trades the same. But once you take that red pill and you see things that are obviously not in your favor, you won't be able to unsee them. You'll be able to look at a trade, right? And it doesn't become, hey, should I go long or short? It becomes, okay, I don't see this long or short position, I'm not going to take it.
Lindau, man. Yeah, so the live trade. So 2 things on that one. So like I said, me and Brad, we both came over from traditional markets, so we both trade, through a broker that doesn't support right now. What's it called? Support Bitcoin. So right now we just trade the Bitcoin futures. So that's why we asked Baloo what he thought was the best exchange and all stuff. So we're gonna make an account. It'll probably be through Bybit. So yeah, we can post some live trades later, man. But it's very hard for us to post a live trade if we're also gonna be walking you guys through it. So if we do post it, it'll probably just be us, trading, and not too much, banter on the Discord and things like that, because we'll be managing the trades and stuff like that. So, it's pretty hard to trade live, because like I said, we're looking for in and out situations. We're not looking to go long like some of these streamers do, where they just run the thing and then they don't care if they're up $200,000 or $300,000 in the day. So, but yeah, we can get one of those on there for you one day, man.
Exactly. What we can do is we can show you guys the process, which I feel like would be very beneficial. I know a lot of you guys, would appreciate just seeing how, Brad, for example, if he was going to go in a trade, we can just and this also adds on to what James was saying, right? We won't really be active on the chat, but we'll just run and stream the entire process. Brad will just go to the TA, and he'll just, we won't be looking at the chat too much, but he'll just be explaining as he's going, and then he'll go from TA over to trade execution, over to managing risk, and actively reassessing your risk and your trade, all the way up until either a stop loss or a take profit is met. And we'll just kind of escalate from there. And then at the end, after you guys watch that and see that process, we can kind of hit a little Q&A at the end. But again, it wouldn't be a thing where, like how James was saying, we all know who we're talking about here, where you can run a trade and be down 200 to 300 grand, right? And just Like, what kind of value do you get out of that, right? Seeing someone be up in positive 400,000, that's cool and all, but at the end of the day, what value do you get out of that other than seeing, something that you may or may not be able to do, right? And that's pretty messed up, because those kinds of things were meant to prey on people's emotions. It's like, oh wow, like this person's up this much, right? But we don't know the circumstances in their lives that allow them to add so much to their positions. We don't know what they got going on. And at the end of the day, if someone's not helping you, and they're just streaming their trades, what's the point? When you can be making your own money and stop looking at everyone else make money, and that's kind of what we want to do here, guys. We want to give you guys all that. So if you guys haven't checked the Discord, check that Discord and become part of the family, because we're trying to build a community that revolves around altruism. And for anyone that doesn't know what altruism is the belief that everyone's opinions, lives, everything that has to do with other people is just as important, if not more important, than yourself. And if we have a Discord like that in a community like that, where we foster that kind of environment, trust me, guys, it makes learning, it makes everything. The Discord's cool. There's a bunch of people there, not even just for learning. Amazing people that you can get with and network with and talk to about certain things and stuff like that, right? People that have different insights. So again, check all that out, right? Really cool place. I can post the Discord on the chat a few times.
And then let me see here. I think we got one question in here. Long and short, man. Can you just clarify, what does DCA stand for, man?
Oh, what do you say? DCA?
DCA says, do you DCA into your trades or just top right?
Dollar cost average.
Oh, gotcha. Okay. It all depends on the position, man. If you're confident in the trade, you can kind of average in. But if we don't see a trade going our way, we don't like to stay in it too long, especially on a day like this. There's no volume, because it does not look pretty when a size buyer steps in, just rips through everyone's orders. But those marketing, those order questions, like the one Dan's got, the one that who else? Alex had. I got those saved over there. We're gonna let Brad go over those after he presents, because he is our senior risk manager, so he's gonna be the subject matter. Can't even talk.
Mm-hmm.
Going to Baloo right now. Subject matter expert on that. So I'm gonna drink some water real quick. I'm gonna give it to Brad.
So we can. I mean, I could. We're putting together. I'm putting together a thing about exo charts, right? A little template, a little walkthrough, in order to know how to use it. I don't really use exo charts or trade off exo charts. I trade off NinjaTrader, like 3AM's been talking about. Jake, no, I closed that short, earlier. Once we broke above this POC, back above, that's why I closed out the rest of my position. But so, without further ado, we're going to give you guys a little inside information, right? Kind of get your mind right. I'm a big psychology person, and it's not really talked about a lot, and it's definitely not talked about enough in the crypto space. Part of being a good trader or risk manager, as I like to call it, you need to have a good mind, right? You need to be a good trader. And so I'm gonna go through everything right now. And let's get started. And this is a course that I normally run through my new traders when I train them up. 3AM, he remembers these slides, and now he teaches these. But so a little disclaimer, right? Futures and options trading and crypto trading, have large possibilities of reward, but also large possibilities of risk, right? Which is why I always preach risk management. If you're not managing risk, then you are not going to have a good day, right? You need to be able to cut your losers quick and let your winners win. So let's talk about the novice trader, right? Your beginning trader who just found out about crypto or just found out about trading through YouTube or through one of his friends. And basically, they think that they can't lose, right? Especially in a bull market, it's really easy to make money. So they just, they do everything, and then what ends up happening is they end up losing money, right? And so then what happens after that is that's when they jump on YouTube and look for a strategy where they can, always win with this 90% win rate, and just keep going up and up and up from there. Then that doesn't work, and they get back on YouTube or back on the internet and find some other strategy, and then they keep running strategies and running strategies and running strategies until they run out of money, right? So instead of actually learning how to trade, they just try someone else's strategy or try to basically shortcut the market, where that's something that we do not do here. All right. Now we're going to transition to the advanced beginner trader, right? This is our trader that's been trading for a little bit, but they are starting to develop some skills, and they are starting to understand how the market is trading, how the market works. So they're starting to develop some good habits, right? Habits are key. I preach, getting in a routine, right? If you're going to trade, try to trade the same time every single day. I know that everyone has different schedules and work and things like that. But try to be on a schedule. There's a big thing in psychology that when you wake up in the morning, if you make your bed, you're accomplishing a task right off the bat, and that will help you throughout the day. That's truth, right? Most people think that it's not really true, or they can still have a good day without it, and you can, but developing good habits is going to be key. Slowly eliminating errors, right? One thing that you need to understand is that you're going to make errors. Everybody makes errors. I still make errors to this day. I had an error on Monday that I went up big on Monday and then gave it all back to the market because I was just making silly errors instead of following my trade plan. Right, writing everything down, performance and errors. Right, a lot of people like to write stuff down when they win big and then post it on the internet, but you never see people post their losers. Right. One thing about me is that you will see me post my losers. Right. We did take a couple of losses on some shorts that I got in a little bit early, FOMO'd, and instead of being patient and decided to jump in. Yeah, I got stopped out, decided to get in a short again, got stopped out. And then when I say stopped out, I mean I closed the trade quick because I saw that it wasn't working as fast as I wanted it to work. We ended up entering the trade a little bit later, and then we caught a nice short. And then the next thing is focus on the journey, right? Understand that you are not going to just start today and then a month from now be making $500 a day or $1,000 a day or $100,000 on every trade, right? It's just not realistic. Most people don't have the big account size that a lot of people wish they had. We watched a video the other day where CryptoFace was in a trade where he was negative $380,000. Right, most of us are not really going to be able to handle a loss like that or a pull down like that. So that's the point of what I'm trying to teach you guys, is to be in and out quick, right? You'd rather pay the commission and a small loss than trying to dollar cost average in or average in, and then basically just try to buy the dip. But what happens when the dip doesn't stop soon enough and you get that margin call or liquidated, as we call it in the crypto community, right? So you need to focus on that journey. A key thing that's going to help you do that is make some short-term and long-term goals, right? So a good short-term goal is within 3 months of starting trading, I want to be consistently break even, right? A lot of people think, oh, I need to be consistently profitable after the first month, right? If you're trading for 3 months, right, and you're new and you're just learning a profitable style, especially the style that we'll be teaching here, is something that you need to understand is that, it's not going to make money right away. And that's not what you need to focus on. You don't need to focus on, I need to make $50 a day. I need to make this, I need to make that, right? So a short-term goal would be, I want to be consistently profitable or break even at 3 months mark, at the 3 month mark. And that's what you're focused on. Not, I need to make a certain amount of money. Let's say you make $1 every single day. Well, you made $1 every single day. You're consistently being profitable every single day for an extended period of time. And that right there is showing improvement. Okay. And then a long-term goal can be, I want to up my leverage, or I want to, be able to do this or do that. Right. Long-term goals is, I want to be able to replace my income with my trading, right? Which is my goal for everyone in the Discord. And that's kind of what I've been preaching since day one, is that I'd like to teach you guys not how to get rich, but I'd like to teach you guys to learn how to trade for an income. I'd like to teach you guys to the point where you could get on the computer every single day for a small period of time, and then, you know, make 500 bucks. And then, you know, then just call it a day, right? Make 500 bucks a day. That's going to be 125K a year. You know, that's a pretty decent living depending upon, you know, where you're at. Just joining at the office at the time. Thanks for your time and sharing. Yeah, I appreciate it, Otto. So next, eliminate outside distractions, right? This is a key one. And if you trade on a trading floor, if like you trade in our office or our Discord, and you're getting distracted by the other traders, it's tough. You know, it's tough, especially at first, or if you are trading at home and you've got kids, or, you know, you've got other stuff going on, or you're trying to trade from your phone and you're at work. You know, it's a tough thing to do. So you definitely want to make sure that you can eliminate some of these outside distractions in order to, you know, in order to be successful, right? And that's why 3 a.m. was talking about earlier, is that, you know, it's a little bit different trading successfully when you're running a live trade, which I did download. You know, I downloaded that XO charts for you guys and set up a Bybit account just so we can do a live trade on there. I would show you the NinjaTrader trades live. It's just that we have some proprietary indicators that we can't really share on the internet, so that are, you know, specific for us. And you know, if you were to join our team, you know, you might have access to these, but it's a little bit different, right? And so, and this is just the advanced beginner trader, right? This is where you're at. This is where you guys should aim to be at within 6 months to a year. And I know a lot of you guys are thinking like, you know, fuck that, 6 months to a year. I need to be rich by then, right? But that's just not how it works, right? That's just not how it works. Are you using low leverage? Like, what are you putting up as a trade to get $500 a trade at what leverage? Long and short. So I'm not trading on leverage. I'm trading on, you know, margin through NinjaTrader. So that's not something that I'm doing. And I'm not saying you're going to get $500 every trade. I'm just saying, you know, if you can get on the computer for a couple of hours a day and make that $500, you know, that's a great goal to have, because that can provide an income. If you can make $500 a day, you know, that can replace your career, right? Depending upon what you are. If you're a doctor, you know, it's not going to replace it. You know, if you're a defense lawyer, it's not going to replace it, right? If you're a prosecutor, it'll probably replace it because they don't pay prosecutors shit. But, you know, and so let's go on to the final stage, right? This is where, you know, this is where you're able to start stopping bullets with your hands, as I like to say. You've eaten the red pill, you followed me down the rabbit hole, and now you're starting to believe, right? And you're turning into a competent risk manager, right? Not a trader. I'm not a trader. I never call myself a trader. I call myself a competent risk manager. And this is because that's what I do every single day. I manage risk. I mitigate risk. I mitigate risk between myself. I mitigate risk between my traders. You can ask 3 a.m. I'm on him, you know, like white on rice every single day about how his trades are going, right? Because that's just who I am. I just like that, to manage risk, right? I'd rather make $1 than make $100 or lose $100, right? I'm not really big into gambling. I'd rather just make $1 today than, you know, hit a scratcher and either lose $100 or win $100. So I'll just take the dollar. The dollar will be more consistent over time anyways, right? So when you start to become a competent risk manager, this is when your habits become involuntary. The things that you're going to be doing are going to be just happening. You're not even going to notice them. You're just going to be so used to them happening that, you know, when you get on the computer, you already know what you're looking at, you know what you're looking for, and you're just, boom, locked in, right? You're not focused on making money. Like I said, I'm not focused on making money. It's just not something that I concern myself about. I understand how the markets work, and I understand that the possibility will be there every single day, right? You know, I've had days where you make upwards of 10K, and, you know, the same thing on the inverse, days where you lose it all, right? And it's, you know, unfortunately it's part of it, but that's, you know, that's what happens. You don't want to let greed dictate your trade, and you want to make sure that you can keep your edge, so you don't push your short-term goal off to try to achieve the long-term goal. You need to understand that it's a stepping stone, and that short-term goal is going to come first. don't try to predict the market, right? This is what I preach all the time, and this is why I'm not a huge fan of, Fibonacci's and things like that, because one, most people don't know how to use them. Most people just put them anywhere and they're like, oh, we're hitting this Fibonacci, right? If you're using Fibonacci on an intraday move, and you're not just taking a quick scalp, then you're not using Fibonacci's correctly. Most institutional money is using Fibonacci's on a bigger time frame, and they're using them on a daily chart or a weekly chart or a monthly chart. They're not really looking for, this small move, and that's what we're looking for. We're looking for, like I've said, the dolphin comes up above the water, we grab onto the fin, we ride the wave with the dolphin, and right before the dolphin decides to dip back to go underwater, we have to understand that we as humans, we can't breathe underwater for a long time like some of these people that have bigger accounts or institutional money. So we let go, and we just wash into the shore, and then try to swim back out, paddle back out, and find the next wave to ride, find the next dolphin to grab onto. Understand that you can go back, right? Just because you get in the zone and you become this competent risk manager and you're killing it, you're having this amazing trading career, and then all of a sudden, you lose your edge, or you start getting a little bit cocky, and then boom, you're back to being an advanced, or to being a beginner, right? It can happen. And then keep a flexible mindset. Understand that every day is going to be different. Maybe one day, like today, right? Today, even if I was on the computer all day, I wouldn't have taken a trade until that short trade that we took in the room. And the reason being is because the market wasn't giving us anything. And that's the thing that I like, crypto right now, because it's so new, basically everything just kind of follows Bitcoin around. Sometimes you get some nice rips on some other altcoins, but you've got to be out there searching for that, right? And that's the same thing in the traditional market. You got to be out there searching for these things. If you're trading the ES, the S&P 500 futures, and they're not moving, well, either decide today's not a great day to trade and then just go enjoy the rest of your day, or find something else that is moving, and that way you can find something to trade. Be able to detach yourself from every trade, right? Understand that you get in a trade and you lose a trade, right? And then you start revenge trading. Most people will do it. They'll just start revenge trading. They'll be like, oh, I just lost $100. I need to make that $100 back. And so then now they're like, I'm getting in a trade. Instead of being patient, following their actual trade plan and using the things that they use to trade, they just know that they need to be in a trade, because if you're not in a trade, you can't make money, right? Well, also, if you're not in a trade, you can't lose money either, right? And that's a key thing, is capital preservation. As I preach all the time, capital preservation is going to be key. So let's move on to the attitude, right? The attitude of a good trader. Don't make excuses, right? A lot of people make excuses. The biggest thing I hear, and I'm not trying to, crush anyone's dreams or put anyone down. The biggest thing that I hear is, oh, this is so manipulation, right? Everyone says that. Oh, goddamn, Peter Schiff is over here shorting Bitcoin.
It's because he is.
He's smart, bro. But so don't, because the manipulation shouldn't really affect you, right? And yeah, it's manipulated, but so are all of the other markets, right? And a lot of people came over to crypto from Forex because they were sick of the manipulation, right? If you trade Forex and you don't have contact with some high up government officials, then you have no business over there in the Forex market, especially if you're trading long or big size. It's just not it's not something that anyone that's not on an institutional level should be doing. Another big thing is the fixed mindset. You need to be able to kind of get away from that fixed mindset and understand that there's so many different opportunities out there, and don't just think like, I need to do this. Understand the process, understand what's going to go on. And my favorite one is a growth mindset, right? And have an open mind. These are two things that I wake up and think every single day. I like to go down the rabbit hole. I like to find out new things, even if they're not really pertaining to trading. it's always good to learn new stuff. I never write anybody off. Like even in the Discord, when anyone posts anything, I'm never in there, basically saying, oh, you don't know what you're talking about. I like to look into it, right? I like to check it out and kind of see what's going on. So I'll give you guys a little bit of an insight on my my morning routine. I wake up in the morning, I meditate, right? As soon as I wake up, the first thing I do is wake up and I get right out of bed, right? Even if you just get out of bed and stand next to your bed, when your alarm goes off, just get up and just get out of bed. Most people snooze it like about 1,000 times, and then they will, fall asleep and then wake back up later. Just stand out of your bed, right? Maybe do some burpees, right? Burpees are good for you. Drink water, right? When you sleep, your body naturally dehydrates itself. So, replenish your body by drinking water. A lot of people don't drink enough water. So if you slam, a cup of water or bottle of water every morning when you wake up, you're going to start off on the right foot. Review when you get back to your computer, review the overnight action. Look at what happened when you weren't on the computer and, check the news, see if anything happened, see if Elon shot us a tweet, or China said that they're going to ban Bitcoin. See what's going on in the overall news. That way you can kind of get the market sentiment, right? And then look at the current price action, and then finalize your trade plan. Say, okay, if this, then this, if this, then this, if that, then this, right? I do like to have my 3 next best trades. Definitely my 2 next best trades for sure, right? Byron says, embrace the suck. Yeah, he knows what we're talking about. Those burpees are fun. And then what I like to do is I like to turn off all my monitors. I like to sit completely quiet and, get rid of all distractions, get rid of everything, and then just completely focus. And then, I hit my 2 minutes of silence before the open, where I'm just basically just getting in the zone. And then I focus on trading for at least 1 hour straight, right? A lot of times, a lot of people cannot focus for longer than an hour. So if you start to see yourself getting careless after the first hour, then, just take a little break. It's not going to hurt taking a little break. And then this is more for, like I said, this is something that I run my traders through. Trade the last hour. This is for the traditional market because the first hour and the last hour are going to be, more beneficial because the volume is going to be there. And then document the day. Document. Write every single thing down. A lot of people don't document anything, and so that's what you need to do. If you're not documenting, your trades, you need to start. Okay. Evening routine. And this is, like I said, more for a traditional market. So we'll kind of pass through this a little bit quicker. Is, you're going to review the session. You're going to update the chart wide time to narrow time, double check the calendar and earnings to see what's going to be happening. You're going to prep your notes for tomorrow and generate your 3 hypotheses that I was talking about earlier, understanding like, okay, if I wake up and the market's down here, then I'm going to be looking for this. If the market's up here, I'm going to be looking for this, things like that. And then disengage completely, right? Take a break from the market. Everyone is just kind of like attached to their phone at all times, just waiting for a nice trade setup. And with Bitcoin, you never know when it's going to come. So it's even more relevant in the crypto space, right? But listen, the trades will be there, and you don't need to make a trade every single day. If you make a trade consistently profitable 3 out of the 5 days, let's say, you get 3 nice setups, then, you win. You win those 3 trades. Well, in those other 2 days, you don't have nice setups. Maybe you win, maybe you lose. It would be better to just, take a better approach to it and just turn the market off, right? Trade execution routine. So this is what you guys are kind of asking about, how I'm getting into my trades or how I'm looking to place my trades, where I'm looking to place my trades, things like that. And we are going to touch bases on that because I know that that's what you guys were kind of looking to. Since crypto is 24/7, can you tell us when you can decide where the beginning of the day and last hour are? So for me, the beginning of the day is 6:30. That's where the cash session for the U.S. On Pacific time opens, and then closes for me at 1 p.m. On the East Coast hours, it is 9:30 to 4. Those are going to be the most active times during my session, just because that's when Wall Street is open, right? The cool thing about Bitcoin is that you can separate everything into different time frames, and you have the Asia session, you have the EU session, you have the I think Australia has their own session, and that's going to help you guys decide when you're going to see volume and when you're not going to see volume, right? So you develop a clear and immediate bias when you get on your trade, and this is our trade execution routine, right? A lot of people are looking for this. They're like, hey, I want to know why you're getting in a trade, what's putting you in. Be patient, right? This is probably my favorite thing, and the most underutilized thing is people are not patient. They're like, okay, it's going to go down, I guess I'll just click sell, right? Michael, I have the premium version, I believe. I don't know, 3M, is that right? We have the premium.
Yeah, so I believe EXO, I think there's a Pro and a Premium. It's the same thing. I think one just allows you to download to the desktop. The other one's going to be all web-based. But, Michael, we got you covered, man. So just get the one. I think it's just I think they only offer the Premium right now, because the other side should be blocked out. Now I know what you're talking about. Yeah, so there's only one side. It's the 29 euros a month.
All right. Look for liquidity to lean on. And this is what I'm talking about is I'm always stop hunting, right? I'm always looking for stops. And that's because, that's what's going to give us that little boost that we need to get in, and we can start running stops. And that's what I like to do. That's how I like to trade. I like to run some stops so I can get in the market, and I'm not sitting here waiting. I like to get in and watch it just take off, right? And that's what we've got. That's what we've been doing. So should we not be trading weekends? You can. I mean, I'm not saying that you shouldn't. I'm just saying that I don't, right? I don't really trade on the weekends. One, because
exercise more caution, my man. Exercise a lot more caution. Sorry.
Yeah. One thing, the natural market or the traditional market is not open on the weekends, so I don't really mess with it on the weekends. But I do, especially with crypto, if I see a good setup, then I have a good setup, and I have a lot of alerts set through my phone to send me an email. And I check my email pretty frequently because I have a lot of stuff going on. And so if I see like, okay, one of my alerts was hit on Bitcoin, and I like jump on the computer, pop a chart open, and see if we can catch a good trade setup, right? Especially now that I'm in the community with you guys and with C137, I definitely enjoy trying to help you guys out as much as I can. So if I can find a good trade for you guys on the weekend as well, I'll definitely try to help out.
Hell yeah.
Define stop and profit targets before entry. So you guys will see when I post is that I'm always setting these things before, right? And for me, they're concrete. If I say my stop is going to be at this spot, then that's where my stop is going to be. I'm not going to let it get to that spot and then move it and then move it and then move it. What happens is, people keep moving it down, and then they take a huge loss and they get completely wiped out. He said, "You sound like Tino." I don't know who that is. Rastamars. And then we want to stalk the trade, right? So we're looking at the charts. We know what we want to do. If this happens, then that happens, then this. So that's what we're looking for. We're stalking it. We're like a lion or a tiger or cheetah, whatever animal you like, right? Like a jaguar. You guys seen that video of that jaguar just basically diving into the water and killing a crocodile? That's the kind of kills that I like to get. Quick, fast, and savage.
Done.
And then you're done, right? And then you just shut your computer off so you don't give it back. And then you execute the trade, right? It happens, right? And it takes time. And that's why all of my traders, I literally, and I know this might sound silly to you guys, I make them just watch the screen. They don't get to place any sim trades. They don't get to place any trades. They just get to stare at the screen. And then I ask them, hey, what are you seeing? What are you looking at right now? Tell me what you see. And then they tell me, and if they tell me something that I am seeing as well, if what they're seeing matches up with what I'm seeing, then I'm understanding that their growth is happening. And that's what I look for. Trader's Reality. We'll have to look him up. Maybe we can get him on the stream. I'd love to talk to somebody that has a good mindset like me. That's be able to share the wealth. And then manage the trade properly. Like I always tell everyone, you need to manage that risk and, stick to your trade plan. If your plan was to take profit, let's say you get in a trade, right? And let's just say we'll just use 35,000 Bitcoin. You're in the trade at 35,000, and your take profit levels are 36 and 37, right? But price gets to 37, and then it just keeps, and you're like, no, I'm gonna move my stop up because we're gonna keep going. And then it starts to bounce, starts to drift down a little bit, and you're like, no, it's gonna keep going. And then all of a sudden it comes back down, and then you get taken out. And you could have had that, could have had all that money that you just gave back to the market because you didn't want to take your profit because you wanted to hit a home run, right? I'm not in the business of hitting home runs, right? I'm in the business of getting on base, right? If everybody gets on base, especially as the community grows and you guys get trained up and we all are just calling out perfect plays or perfect analysis, 100 decent traders are going to trade better than one good trader or two good traders anytime. I promise you, anytime. And so if we're all trained up, we're all looking at the same stuff, we're all telling each other like, hey, I see this. And then, I run all of my trades, by my traders. Definitely, 3 a.m. he's my senior trader. Say, hey, what do you think about this? All right. And he goes, yeah, that looks good. All right. Now I have a little bit of confluence, right? But I have to understand that I'm not going to be developing a bias either. But, it makes me feel a little bit better if, one of the senior traders is telling me, hey, this guy knows what he's doing. Right. So that's one thing I'm looking for. Why you do this? What do you mean? Trader's reality, his strategy is complicated. All the patterns, doesn't believe in indicators either. All about patterns. Okay. So he uses like, wedges and all that stuff. Flags and whatnot, and then close the trade once it tests or fails to test, right? So if it gets to your profit target, let's say it gets to your first take profit and it stops going up, well then just close the trade. And one thing you're going to have to realize is sometimes trades are going to run without you, right? So let's say that same trade, you got in at 35, it went to 36, you took profit, it was going towards 37 but didn't, you decided not to cut it, you decided to let it come all the way back, but you kept moving your stop down. Eventually you get liquidated and then it runs up, right? Or you took profit at 37 and then it goes up to 40 and you're like, damn it, I should have just stayed, I should have caught that 40. But 9 times out of 10, by sticking to your trade plan, you're gonna be successful and profitable. And that's the goal, is consistency in this game is how you last. Like I said, you're going to get up, you're going to bat for a single, right? I'm going to slap the ball at the ground in between first and second base, and I'm going to beat the throw to first, right? And so by doing that, sometimes when I swing, I hit a home run, right? Yesterday we hit a 12% move, right? That's not what I was looking for. Definitely not. But it happens, right? So by looking for those singles, sometimes they're just going to go and you're going to already be on base. And what's going to happen is you're going to smack that ball in between the first and second baseman. And that outfielder he's going to fumble that thing, right? He's going to have an error. And you're going to turn around first. You're going to run to second, right? Maybe the throw comes in. I'll teach you how to steal third, right? Or, he throws to second, overthrows second. Now you're rounding second, rounding third, and now you just got to beat that throw to home. And by beating that throw to home, what I mean is taking that profit, right? A lot of times it comes all the way down. If you don't take profit, let it come all the way back up to your stop. Well, now you were just in a trade for 2 hours and you could have profited, but you didn't because you wanted to hit a home run, right? Instead of just stopping at second and understanding like, okay, that was a good hit. And then after the trade is over, review the day and prep for the next trade. So review your day so far, review how that trade went. Think about things that you could do to improve your entry. Think about things that you can do to improve your management while you're in the trade. And then prep for the next trade. Take a look and then go on. And so now we're going to talk about a little bit of motion with the trade, right? A lot of people don't understand how much emotion is in every single trade. They get in a trade and they think, okay, we're going this way, we're going that way, and they get their bias. They get so blinded that if I were to replay it to them and they were not in the trade, they would be able to tell me exactly what's happening. But since they're in the trade, they don't understand what's going on because they have a bias formed, right? And so that's what you're looking for, right? You're looking for it to be able to recognize that thing and trust your routine, right? Trust that your plan is going to work. And if your plan doesn't work, trust that you're going to end it, right? Rely on the training. Like I said, is you guys are going to be able to rely on me for the training. I'm definitely going to develop something for you guys. I'll gear it more towards crypto. All the training that I have pre-developed for my traders is more towards the traditional market. And then as we go, I can definitely, if you guys are interested in learning the traditional market, we can definitely open that up. And if some of you guys want to take a peek at both, then definitely more than welcome. Understanding your emotion, right? That's one thing is you have to understand is that you are going to have emotion, so don't try to fight it. Just understand that it's going to happen. And the biggest thing is like, even if you lose a trade, every trade has a chance to lose. You've got to understand that every trade that you get in is 50-50. And anyone that tells you different just doesn't know what they're talking about. Every trade is 50-50 because you don't know what's going to happen. You don't know if right when you get in the trade, you just saw the green dot, the money flow is rolling up, the VWAP's rolling up, whatever else is on that market cipher is going this way. And you enter the trade, and then Elon says, "Not today, Eduardo. Today we're going down." And then you just get shit on, and then you're pissed at Elon, like it's his fault, right? And if you're trading with us, you cut that trade short as soon as it happened, and then boom, you're out of the trade, and then you just understand, like, that happens. Losses happen. That's part of the game, right? One thing I tell my traders every single day is just do your job. Just get on there and just do your job, right? Your job is to trade to your plan. I don't care if you get on the trading platform and don't make any money. I don't care if you get on the trade platform and lose money. I don't care if you get on the trade platform and make $1 million, right? If you didn't stick to your plan, I don't want you. I don't care. It is his fault. Yeah, it's always Elon's fault. Like goddamn Elon and Peter Schiff, right? The two most hated people in the crypto space
as of 2021.
You got your all asses on Doge,
bro, for real.
If you guys were smart and sold before like I did, but we have a good buddy who's still holding that bag. Probably just keep that beef forever,
bro.
He just thinks
we should get him on stream one day.
No, hell no.
Like, hey, how does it feel to hold? Just kidding.
he'll tell you a story about how it's still going to $1 back when it's underneath of a penny. He's like, nah, it's coming back. I promise.
That's what they prey on, the mindset right there.
Yeah, that's what people are pumped up with this information every single day.
Remember, guys, you can't predict how Baloo was talking about earlier, try and buy the bottoms and the tops. You can't get the bottoms. We can't get the tops perfectly. We just want to get close enough and get in the right direction and trade with the trend. So, if you guys are feeling like, oh, this is a big gain, if you're able to take a picture of it and show it to somebody, and be like, oh, look how much I made, it's probably time to take some profits or, get out of that trade because that's when things are about to go south.
And sometimes you will nail the top or nail the bottom, right? And that's just part of the game, right? And then you can clip it and then post it on your Facebook and be like, hey friends, guess what I did? I nailed the top. How about that? I'm a professional, right? But really, you know what you were doing? You're doing your job. You're trading to your trade plan, and your trade plan put you in the perfect position to be able to nail that top. And if you weren't doing that, then you wouldn't have hit it. Right? Recognize that every trade is either a win or a loss. I kind of already touched on this, 50-50 chance. Let's talk about some common mistakes. Right? Not taking a trade plan. What happens is a lot of times, the trade will come up and you won't take it because you get some emotion, or you're like, I don't know because I don't see a green dot, or I don't know because of this, and then you don't take the trade, and then the trade starts going the way that you want. You FOMO into it, and then the trade reverses on you, and you go, damn it, right? And then for the rest of the day, because you didn't listen to yourself, you didn't follow your trade plan, now you're trying to make something up and you're making mistakes because of this. And this is a common thing that I see all the time. But you can retrain your brain and get yourself out of that. And that's what we're here to help you do. Micromanaging a trade, right? A lot of people will just keep moving their stuff like super tight. Okay, I don't want to lose money. I don't want to lose money. I don't want to lose money, right? And this is something that I struggled with at first when I first started training, is because I just wanted to win. Like I said, I just want to win $1 every single day instead of letting some of my trades run. And then as you build up your confidence, you can start trading with a little bit more size and you can let it run. But back to that trade, right? Let's say you're trading on a small account and you get in at 35,000. You think that it's going to go to 37, right? But your profit target and your plan is telling you to take profit at 36. Well, take profit at 36, because what's going to happen is you're going to have your profit target at 37. It's going to go really close, and then it's going to come all the way back to your entry, and you're going to make nothing when you could have just made that 36, right? Just, don't be comfortable with just making money, right? A lot of people are not. They want to hit that home run, right? Just get on base. Just get on base over and over, right? If any of you guys played baseball as a kid and you didn't have enough people to play, sometimes you got to let that ghost runner run for you. Chasing FOMO, right? This is a huge issue with a lot of traders, and you're seeing a lot of people, and I have a lot of people hitting me up throughout all aspects of social media, saying, even friends from high school, they're like, "Hey, man, like I'm in this position, I'm negative this much. I don't know what to do. Should I just keep holding? Should I close it and just realize the loss?" An unrealized loss is just an inevitable eventual loss depending upon your account size, right? How long are you going to hold a loser? A lot of people bashed on Warren Buffett because when the crash happened, he sold his airline stocks on the way down, right? And if you look at airlines today, they're nowhere close to where they were at. And when it happened, he just understood that, it's not coming back for a while, and I'm just going to close them. He probably bought them back down lower. So he probably bought them, years and years ago. Warren Buffett's about 150. So, he probably bought them like, the year the Wright brothers first started issuing, plane rides and stuff.
Man got on the emerging markets.
Right. And so people calling him stupid, it's like, well, now he's just taking the loss, understanding like, okay, this is a loss I'm just going to have to take. Might as well just take it now instead of waiting. Or your dog insists on a walk right at this moment. You're about to hit buy, which you do, and then you get liquidated when out with the dog, which sucks, right? Yeah, and so that's the thing. If you can't say or stay, fully focused on the market, then just don't, right? Don't place the trade. There be other times to make the trade. Big Blaze says, I feel my stop loss placement needs a lot of improving, and that just comes with time, right? That's all that's going to happen. It's going to come with time, right? And allowing yourself to be influenced by others. This is what C137 was saying, right? And I've told you guys, my profitability over the years is about 65%. So definitely not 100, right? Any trader that tells you that they're about 80% profitable is just full of shit, right? And I promise you that. There's no strategy out there. If there was a strategy out there that was 80% profitable, you wouldn't share it. There would be no point, because you could just make money off of it. And then if you started sharing it, what would happen is the market makers would change the market, so it wouldn't be profitable anymore. And any single trader or any type of institutional money, they're not making 80% of winning trades. It's just not a thing, right? One thing that happens, right, and this happens on trade desks all the time, is you accidentally click buy or you accidentally click sell when you're meaning to do the inverse thing. And then you're like, okay, well, let me just see if this works, right? Not a good idea. Just close that trade immediately, realize that loss, and then go back to your plan. So we're going to touch on some of the key topics. Stick to your plan, right? I'm always telling you guys this. Always stick to your plan. Pay attention to your attitude, right? This is where you're not saying things like I should or could or would. This is where you're paying attention to your attitude. Be like, oh, I could have made this. I should have done this. I would do this, right? If I would have, bought just the NASDAQ in general in March last year, I'd have a lot more money because the NASDAQ just went on, an insane tear, right? Or if you would have bought Tesla back then when it dropped down to $400, would have, could have, should have, right? It's just all nothing, right? I wish I would have bought, Bitcoin when I was in high school when it was,
Oh man,
like you guys see that there's a meme that some guy paid like 100,000 Bitcoins for a large pizza from Domino's or something like that, right? And he's probably like, fuck, I should have done this. I would have been a billionaire, right? But he's not. And that's just a terrible mindset to be. That's not good for your mental health at all. Keep to your routine or habit. I promise you this will work. I stick to my routine like religiously. I'm always on the computer at 5 a.m. every single day, right? I took a late day today because I had other things going on. So there was no reason to get to the office that early because I wasn't going to be in there. Test your edge, right? If you're starting to improve, let's say you're being consistent over a couple of months, up your leverage or, find yourself a little bit more and then test that edge. If you start to, let's say you're making $50 a day and see if you can make $100 a day. And if you start losing, then go back to making $50 a day, right? Until you can get, more consistently profitable over time and then bump it up again, right? Keep testing that edge. Always try to improve, right? Don't rush the process. It will happen over time. Big Blaze says small profits are always better than unrealized profits. That's 100% true, right? 100% true. No stop loss and big losses hurt more. And that's a big thing. You can kill your account. You can go profitable 30 days in a row. And then that 31st day, you decide I can't lose and you don't listen to yourself. And then boom, you lose. And what happens? You wipe out your entire gain for the whole month, right? Now you're back at square one. Only if you had sold your NASDAQ holdings in February, pay yourself, take your profits. Yeah, I mean, definitely a good idea. Luckily for me, I did sell out of all the shares of Apple I had a little bit before February, right? I didn't really get to nail that top, but, and then what have I been doing is just putting, all of my money into Apple so I don't have to pay taxes on it until I get really old because that's what smart people do, right? And taxes are a scam, so.
That's a fact. Taxes are ridiculous.
So trade placement, right? So this is what everyone wants to see, right? Everyone's like, where do I place my trade? Where do I place my stops? So let's jump back on the chart. Does anyone have any more questions about this before I kind of close it off?
Yeah, so we got 2 questions. I think Dan's been waiting a while. So Dan's question is, no rush on this question, but would you guys consider, what would you guys consider is the key to becoming more comfortable with increasing your position sizes and amount of capital in a trade? Good risk management, question mark.
The key for something like that is consistency, right? If you can be consistent over an extended period of time, and I really like 90 days because, they say they say it takes about 21 days to develop a habit. Well, if you can times that, by 3 months and you're consistently nailing this 3 months, then, oh look, see, and this is where I was looking to get long right here at this 36.5 level. I like this level up here because we've got a bunch of stops to run to the upside. Let's see. And so does that answer your question, Dan? After you get consistent over a period of time, then start to bump up that capital and things like that.
Then I got one more from Alex. It was, can you go over about where we should place our entries? Like after you make a call, we asked about this earlier in the Discord.
So yeah, definitely. One thing that I'm looking for. So we're seeing this. We're in C period. Never mind. So one thing that we're looking for. Where's my pen? Is let's say C comes up to about right here, right? And we see it kind of just bouncing around. Well, this is going to be, that's where I'm looking to enter in this trade, right? And I'm looking for a break break of these stops here, break of these stops here, break of these stops here, and break of these stops at these two levels. That's where I'd like to run, right? This is the previous value area high. So I know I'm going to see some resistance there. There's also, this is where people have been short from, all in this area. And so what happens is you're getting in here, you're placing your stop initially right here at the bottom of C, because you know if we go back to the bottom of C, you're wrong. And so you need to just realize that loss. But a lot of times what's happening is if I see the price action bumping up against this top and it's not breaking, well, I'll just cut that trade off real quick, right? Cut it loose, right? And then maybe it comes back down a little bit, then comes back up and tries it again. You re-enter the trade, and then boom, it pops, right? If it doesn't, then cut the trade again. That's how you want to stay consistently profitable. As far as entering a trade down here, right? Because you feel like you're missing this move right here. You feel like you're missing these couple hundred points. And if you would have got in here, you could have got all this and then the break. And so now you're missing on this. But I mean, really, you could get in here and your stop's here, and you're going to convince yourself that it's still going to go up. What's going to happen is price is going to go down. You're going to move your stop. You're going to move it down a little bit, down a little bit. It's going to start to rally. And you're like, okay, here we go. And then Elon sends a tweet and you get wiped out. Right?
So, Michael, it's not the colored bars or stops. Those highlighted blue bars, those are the single prints right there. And then usually stops are at the tops and the bottoms of bars. So, like I said, most people are trading on a 30-minute time frame. It's a little bit longer time frame because most people are there holding for a little bit longer in the day. So, right there in C period, people got short at the top of B. So right there at the top of B, if C period comes above, we can expect, a little push above, but we're still going to have to break above L period, which is over to the left, because that's where people got short from too. So that's what he's saying, that, there's these stops up here, and that's what we're looking for, things to break through, because, we're looking at support, resistance lines. Well, what's support? What's resistance? It's all volume, right? So people came into these trades right here at the top. No, not exactly the top, but within these bars, right? And so basically what we're looking to do right now is for, things that come up and break price or break market structure.
Right. And yeah, it looks like we just did. We had a nice little pop right above. And where did we pop to? Right here, like right there below this. So we're seeing some responsive selling, as we instantly come right back down to the top of B. So this is where the position was built. This is where people actually got long from. We ran these stops. And the reason you see a pop like this is because you have a bunch of people that are short right here. And so they were sellers and they got liquidated. And when you get liquidated as a seller, you turn into a buyer. And so what happens is volume pushes the price up, comes back down here. And so this is a good spot. If you think there's going to be some continuation, you enter a trade right here. And your targets are over here at the tops of these bars when these people that sold are going to get liquidated and turn into buyers, right? So this price comes up to here, you'll see a pop, and this guy will turn from this into a buyer. And this is just basic market structure. This is just how the market works, right? Eventually, as you watch it, you can see liquidations if you press the rec tab in the top middle.
It's by volume. On the middle top.
It's like the bubbles that you get when you have a lot of volume in the bars.
You can see. This shows you liquidations. That's what that's showing.
Oh, that's what they were saying in the chat.
Yeah, I don't know about that.
That's what we use.
Because price
we use the
hasn't.
volume profile
price
over to the
Price
right
hasn't been
forward.
up there yet. So
Want to see where price is in. Over to the right side. So those black and orange bars, that's volume profile right there. That's how many trades have happened at that price level. So we look for high volume nodes, low volume nodes. You've heard us say thin spots and things like that in the Discord chat. When there's thin spots, it's easy for a trade just kind of go from one volume node to the next volume node, because there wasn't a lot of market action that happened in those thin spots and things like that. And right now is not a good time to watch, Christoph, because like I said, you need volume to trade. And this overnight, this weekend volume, especially on a 3-day holiday weekend, there's not going to be a lot of volume in these markets right now. normally we will always place limit orders. Sometimes you are going to see something that's going to run up and never come down, but that all comes with screen time. So that's something, every single condition is different. We can't say it's the same thing for everything, but 90% of trades are going to be placed a limit order, not with a market order. Market order, like I said, are the people with the size, the people with the positions, the people with the money that are going to be chasing or pushing price. Then we have the people that are FOMO, going to get into the price and market order in, and that's when market's going to turn around and come back down. You guys are thinking the trade is reversed, and then it's really just coming back through, clearing out some sellers, picking up limit orders, and going to go back to the direction it was going in the first place. So limit orders 90% of the time, not market orders.
Yeah, I'm a big limit order person.
You have
If you hover over, it says liquidations. Yeah, so I mean that makes sense. Like, so if you have people placing limit orders there, so this might be a little bit of
the liquidation price.
Lindell, the best way to look at this actually would be in a footprint chart.
Yeah.
And we haven't figured out what the best settings are yet in this Exo chart for a footprint. But in a footprint chart, like I posted in the Discord chat, is you can see buy and sell imbalances, and that's what these things are. Is probably buy and sell imbalances. That means where there's a certain ratio, whether it's whatever you have your setting on to. And I don't know what Exo chart has a setting to, and that's one reason I'm not going to use it. But normally people set their imbalances 4-to-1. So that's what these big green circles could be. Is just larger amount of buying and selling at these price levels. So the best way to learn it is the footprint chart, and the footprint chart is kind of just like exactly what it sounds like. Footprints happen in the past. So we can go back and see like the last bar, the bar before. Where did all these buyers come in heavy? Where did all these sellers come in heavy? So I wouldn't use this too much because, like I said, I don't know the background about this. I don't know what they have their settings set to. But I know they do have a footprint chart in here, and we can show you guys if we can get the settings right on how to use the footprint chart, as well as to use these TPO profiles. And Alex says, you like long at 37.3. Alex, I wouldn't do too much trading this weekend, man, but if you have to do some trading, I mean, Brad can give you his breakdown on what he thinks his next best opportunity is to go long. But, like I said, this is the perfect time just to watch the market because, I mean, it's Saturday, it's Memorial Day weekend, depending on, what country you're in, but, it's a 3-day weekend. I'll just hang out, chill, relax. Because the market's going to be there every single day. There's no reason to trade it, especially on a day with no volume.
Guys, I do still like that long.
Guys, oh, no, sorry, okay. Go ahead. Am I interrupting you?
Okay. So this is the reason I like that long is because if we get up here, there's a lot of fuel, right? And we're going to get above that point of control, and all these stops are aggregated pretty close to each other, and then up to here is going to be that next target up at that 38. So it should be a pretty decent run up. You have real thin spots over here, and you have a nice thin spot on the bigger time volume profile. So we could just run right up through that.
So, Alex, yes, I know who Trader Dale is. He trades a lot of the future markets, and he trades a lot of Forex. And yes, he does use footprint charts. He does use order flow tools. So everything we're showing you guys are order flow tools. These are not indicators. The only indicator in here is the VWAP. And the VWAP, like I said, is just an industry standard. Everybody uses VWAP just to measure what the price was for the day. So order flow tools are things like the footprint chart, which shows you the buy imbalances, sell imbalances, basically time and sales, but into whatever minute time range chart you have your chart set to. And then going over the TPO profile, the market profile. So those are all order flow tools, and that's exactly what Trader Dale uses. And that's what we're trying to preach to you guys, that these are basically the foundations of charting. You guys don't need any fancy indicators. You don't need a MACD. You don't need RSI. You don't need any of that kind of stuff. You guys just look right here at the order flow. This is exactly what all those indicators are interpreting for you, but they're going to be lagging because it's all past information that you use to make those indicators. You guys are the indicator. You guys are going to sit here and interpret this data and be able to see what the market is doing and see, where big buyers are positioned, where big sellers are positioned, and see which way you want to trade with, if you want to trade with the trend or if you want to trade against the trend. So, but yes, Trader Dale, he uses order flow tools. And I believe he also uses NinjaTrader because I think his software is NinjaTrader add-ons, and that's what we use. We don't use as indicators, but I know who Trader Dale is. And yes, ExoChart is a paid pro. It's free to get a membership long and short. And like I said, we're not being compensated by ExoCharts at all. Like I said, it's the only thing on there that is web-based that you can use for a TPO profile chart. It's the same kind of setup as TradingView, so you guys be kind of familiar with the setup and the layout. But yes, it is about 30 euros a month, Michael. So we have a template ready for you guys to use if you guys go ahead and sign up for that. But like I said, we don't get paid for it to endorse it, but it's the only thing to use right now. That's web-based, and that's easy to get into.
And guys, if you guys haven't yet, hit that like button. If you guys are new here, if you guys are just checking out the video, we are, you know, some of the smaller YouTubers out there that are really trying to give back to the community, and we know that we will grow with value. So we're not here for the short term, you know, the short term dumping of these courses and all this stuff, right? We're here. We're not here to offload all these things on you guys. We're here to give you guys good quality knowledge that you guys can actually grow with, learn how to be better traders, and be able to succeed as independently as possible from anyone else other than your mindset and your risk management as to how you perceive the market, and be able to find these amazing moves, whether the price action goes up or down. And if you guys are liking the content so far, hit that like button so we can reach out to other people that can be exposed to this and can benefit from it just as you have. And hopefully you guys are benefiting from this. Check out the Discord if you guys haven't checked it, because there's a lot of people there willing to help you guys out. If it's not me, C137, if it's not Bitcoin Brad, our trader right now that's going through the price action, and if it's not a 3 a.m. trader hitting you guys back up, it'll be our community. There's a lot of people there that are going to help you guys out and are going to be able to give you guys very good information as to where the market is going, simply because they have the skill set and they are in an environment in which no one is getting ridiculed, where everyone can freely express information regardless of how anyone else sees it, because we all know that different points of views are extremely beneficial. So just wanted to add that in there, guys. Check out the Discord. It's a good place to be around. It's a good place to call home.
Yeah, I'll check that out, Linda. The link that you can post into the chat.
What's up?
So Lindau said, if you want a free TPO chart, check out ATAS. I was just wondering if you got a link, man. Can you post in the chat for us?
That'd be nice. Oh, dude, I might get like a desk, like a standing desk. My back has just been hurting sitting on this chair.
Got one, bro. You gotta get it, dude.
Are they good?
Send you a link to Amazon. I mean, I barely use it, but looks cool.
Yeah, no, I need it for my back, dude. My back is hurting. Man, but yeah, we're killing it, guys. The Discord is just, it's taking a life of its own. People there from all sorts of places are coming in. We're making this community great. We're trying to make this easier for you guys so you guys can go out there and just overall, it's not even like Brad was saying, right? It's not about going out there and dropping these crazy, insane trades and being able to make this money right then and there. That does nothing, right? That does nothing. You want to know why, guys? Because these big, huge trades and these giant amounts are unrealistic only due to the fact that if you're able to gain set amount of money, you're also exposing set amount of money to a potential loss depending on how you manage this risk. So these big, ginormous, very capitally condensed moves are not the way to go. And we care about you guys on a genuine level. You know, it's kind of crazy for you guys to hear that over YouTube, but there's not anybody out here telling your average investor, your retail investor, right? And again, we're all retail here. I'm retail, Brad's retail, James is retail. We're all retail, right? So there's no reason for us to be out here and give you guys false information when you guys can benefit from the experience and the accumulative trades that we have gone through. So that way you guys can be profitable yourselves. Again, it sucks, right? Going on a trade and worrying about your emotions and doing all these things. We don't want you guys to be pulling your hairs out of your heads because, you know, you accidentally hit like the buy button you meant to sell and you're probably writing the trade out, or you use too much leverage and now you're freaking out, right? We're here to give you guys the experience and to give you guys all the cumulative knowledge that we have all packaged up into one condensed YouTube channel. And we all know what it's like, right? Me, Brad, and James, we're all veterans, right? We know what it's like just having to do a bunch of stuff, right? And coming back home and, you know, on top of that, manage, you know, an account and try to grow your capital, right? It's just not enough time. No matter what, it seems like every single thing is against you guys. So we want you guys to kind of, you know, be relaxed when you're here. We'll be able to answer as many questions as you guys want, give out as much knowledge as possible, and we'll be able to give you guys a very good market perspective, as Brad likes to call it. We're going to give you guys that red pill, and then that way you guys are relieved from stress, and you guys can trade red pilled and calm, and you know where the market's heading, and you're not going to be, you know, on the opposite end of the trade. You're going to be having that money, like Brad's saying, right? You're going to be telling your boys, like, hey, this is how you make money right here. And they're going to be like, oh, no, like, I ain't worried about that, bro, this and that. But no, not you guys. You guys are going to be profitable traders. You're going to be successful. And at the end of the day, guys, right, it really warms my heart that you guys are such amazing people in the community and being very active. I didn't mean to interrupt you, Brad or James. I just wanted to put that in there, you know?
Oh, man.
We got some amazing followers.
That's solid. That's solid words from straight from the heart, man.
Yeah, straight from the heart,
Couldn't agree
man.
more.
That's how it is, man. You know, we have an amazing community. I'm surprised that other people from other places are not diverting their regular information intake and joining our Discord to get these updates and these things that are going to benefit them.
Was that DMTD? You know, it's not trade advice, but you know, personally, I am long, you know, Cardano, and I mean, it's only a few bucks a coin. The Ethereum, you know, it all depends on where you got in at, man. That's your choice to make. But these smaller coins where it's a couple bucks, I mean, you can buy them, you know, for whatever, and just sit on them, man.
Cardano's nice too. It's a utility coin.
Hey, Alec, we're glad you found us too, man. Welcome, Albert. Link to exo charts. Do you see us in here? You know, I'll go to if you're in the Discord, I will post a link to exo charts in the education channel, and I'll also pin the templates that we have for you guys. Okay. Yes. Thanks for the love, Anthony. Appreciate it, man. What's up, Jake? Hey, from London, we got people from all over the world, man, watching. It's a great community. We appreciate you guys.
Yeah, we're killing it right now. I'm very grateful to be in the position that, you know, that we're all in right now, just being teachers and just having an actual product with
you are the
value.
216 trader.
What happened?
No, Jake says he's the 216. Yes, sir, you are the 216 trader. And Peace, you're right, man. Also, too, if you're hungry, man, you're probably actually just thirsty, dehydrated, not actually hungry. So, yes, water is good for you. Just don't drink too much of it.
Yeah, I need some water right now, man. I'm dying, you know what I'm saying?
Appreciate it. Let's see. Is it in Albert? I will post it in the education as soon as we get off the line. I will post a link, and then if you want, you can DM me in Discord, and I will also get it to you there too, man. So we'll make sure you have everything that you need. Alex, we are privileged, man, to be here. Thank you. All right, you guys got anything else?
That's it.
I don't have much else.
All right. Well, you know, we appreciate you guys' time. You know, this is the only place on YouTube, or the only place in, you know, we're going to tell you guys to go long. You know, we're always long on YouTube. So we appreciate you guys sticking out your time and, you know, spend that time with us. Because like I said, time's the only thing you can't get back. So we're trying to give you guys something for it. So we appreciate everybody here.
Do you have anything you want to say, Brad, for your closing remarks?
That's it. You know, I just, like I always tell you guys, just manage your risk and stick to your trade plan, and you'll be successful over time. And remember, this is, you know, it's not a sprint, it's a marathon. And, you know, I walked the marathon because I hate running. So even though I'm good at it, but I just hate it. So.
And we, you know, we do have some exciting things for you guys in the near future. So just stay tuned. You know, we'll either announce it in the Discord or announce it here on the stream, but we got some things coming up for you guys. So some very exciting things.
Hell yeah, guys. And, you know, thank you guys for sticking. Thank you guys for staying to the very end. Those of you that stay to the very end, that try to absorb as much knowledge as possible, I want to congratulate you and appreciate, you know, and I appreciate what you guys do, taking your time and wanting to learn more. You got to be a sponge. You got to stay active in the markets. If you guys haven't checked the Discord, please check out the Discord. Very great place. We get nothing from you guys checking out the Discord. We get nothing from you guys hitting the like button, right? We want you guys to be profitable traders. We want you to be successful. And through time, as you guys shape your strategies and become red-pilled and see things that you didn't see before, you will end up getting there. And you will succeed, and you guys will make it, right? Always have hope. Don't hit that hopium bong, you know, when you're going long, right? And thinking that your trade's gonna rip through, right? Let's stick together. Let's get some good trade management, some good risk management, right? And see how if we can find these entries together, see if we can find all this stuff together and follow up together and gain this knowledge together. Because as we experience everything together, we can relate and answer more specific questions for you guys and tailor what's been going on to specific events. And if you guys are tuned in all the time, we'll know who you guys are. We can look at the stream and see guys that have been here since day one. So again, guys, just want to thank you guys so much for sticking by and just, you know, being here to see the content we have to offer.
Hey, ready?
At the end of the day, at the end of the day, you know, that's what we're here for. We just want you guys just to look at and see the content, come up with your own opinion. If you don't like it, right, this isn't your style, you know, it's all good. No hard feelings, right? You know, we're here for anyone who needs us. So at the end of the day, guys, you know, as Brad says, manage your risk and stick to your trade plan. And you know, at the end of the day, you know, it's not financial advice, but it's the best advice. So you guys take it easy. You guys have a great day. We appreciate you guys. Thank you so much, guys. Stay blessed and enjoy the rest of your day and time. Later, guys.